Well, good Thursday morning, the 17th of July, 2025. It is 8 o'clock Central Standard Time. And welcome to my virtual trading journal. Obviously, the usual stuff, right? There's not for financial or trade advice. Not monetized in any way, so in it for the subs and the likes. Would be great. Leave some comment in the chat. That's really great. Looks like the stream is streaming, so that's also good. Yeah, interesting morning so far. The purpose of the stream here is that I don't multitask well, and so I capture everything that I'm seeing on my trading screens with the video, and then my voiceover provides some indication as to what I was thinking when it comes to, trade planning or anticipation or whatever throughout the day. I stream starting now at 8 o'clock in the morning every day for the pre-market, etc., and then the open, and through the day, through the entire cash close until 1500 in the afternoon, because I have a commitment not to take any trades off the stream, thereby ensuring transparency and full accountability. The reason I stream it to YouTube is for a couple of reasons. Number one, I can review the stream on any device, which is really handy. I don't have to be standing here. I don't sit down all day. I don't even have a chair in my office. These are two standing desks, so there's that. And also, it provides a permanent record and full transparency. So that's important. Any times that I talk about are Central Standard Time, or that you see on the screens. I essentially have two platforms here. This is Bookmap, and this is IRT, which is Investor RT, and that's my charting package. And then Bookmap is, of course, the execution platform that I typically use. So let's move straight into the numbers. There was a lot of them. Initial jobless, Philly Fed, retail sales, etc. They all came in basically okay, marginally up. And if you notice, this is the RTH Open. We were exactly, there's the open. We basically just traded right around it until 8:30 and opened right on the number. I mean, the number came out right on the open. Now we are trending. We had a crazy Ivan here in the POC, the full session POC, and now we're trading up a little bit. So at this moment, we would be looking to open gap up, meaning gap rules would apply, and on and on and on. None of the, obviously this doesn't take into consideration any of the, what seems to be normal risk, elevated risk from tweets or comments and stuff. They've been, Navarro and some other guy have been busy all morning insulting the Fed chair and policy and all this kind of stuff. So I assume it's going to continue. I don't know. Pretty disappointing to me, but doesn't seem very professional. But then again, look who's, consider the source, right? So there is that. All right. Now, just jump over here to IRT quickly. So here's yesterday's RTH session, and here is our trade so far in the overnight. And you can see that we were just exactly neutral, right on the open, when the number came out at 7:30. Right there. So inventory from now on looks a tad bit long and a gap up if we open up here. So that would suggest some responsive selling to take profit, I would suppose. So far, the overnight has been pretty balanced, as I just, you can see that here. They're just making some retail soup, right? But London didn't come in and do their usual Yahoo thing and, run it really hard one direction. So everybody was in a real big wait and see this morning, as far as I'm concerned. Pre-market, okie dokie. We're talking about that right now. This is, first of all, this is the mini ES, mini NASDAQ, the micro composite ES chart, and the ES market profile. I also do the micros because I push these session prices, make them available to anybody that needs them. So we've pretty much discussed what the overnight trade was so far and what I'm thinking about going to happen at the open probably, which will be I would be looking for responsive selling. Gap rules will likely apply. Astounding, I think I talked about it day before yesterday, amazing how often those pay out or pan out to be accurate, considering it's an old understood concept from way back in the market profile days around, 2000, 2015, et cetera. I think Pete Stottlemyre started developing the market profile back in the early-ish 80s. So, pretty interesting. This is the micro composite chart starting at the high time frame down. This is very simply a RTH session only, ES mini, daily candlesticks or daily bars. That's all there is to it. Wherever price overlaps, I draw the volume profile around and continue to draw it around those prices or those bars where price overlaps. And in so doing, it generates these red and green high and low volume nodes, which push automatically to bookmap. And it generates the MCVPOC, which is right here at 6303, and you can see what the price action was. There was that big sell-off day before yesterday. Here was yesterday's, insult fest, and then ended up essentially at a doji. Just barely peeked across this MCVPOC, but couldn't really get into it or above it. That says a lot to me. Market profile, similar. Now, these session prices I also push to bookmap and make available to anybody that can use them. So let's look at the bookmap setup now. This is the micro composite where I entered these manually. You see the MC, the naked volume point of control, and the MC, and something that's interesting to be sure you're aware of, in my opinion. This is the all-time high, and it was put in the ETH session, which is pretty rare that the RTH traders allow a level like that to stand for very long. I would not be at all surprised if we got up and took that out at some point today or at least in this week. Don't forget that yesterday was the VIX expiration. Tomorrow is going to be the SPX and mini option expirations. So that's on the table also. This is the volume, high volume, low volume nodes pushed from bookmap. Or to bookmap from IRT, sorry. This is the full session volume profile, which started plotting last night at 1700. You see what a short, tight range that was? And this is the RTH volume profile, which is meant to automatically reset at 8:30. But for some reason, bookmap's having a problem doing that now. My bookmap is. So I make sure that it is reset personally. Here is our RTH high. Here is the previous RTH high. ETH high, previous RTH high. At this point, we're gap up by about 8 handles. So the first thing I do with this column is change the column title to the expected open type. And this would be higher out of range, gap up. There's only 4 open types. And there's only 2 criteria that establish them. And that is, where are we going to open RTH today as it compares to the previous RTH close and the previous RTH range? Well, if you're out of range, higher or lower, you're definitely away from the close, right? So it is a gap. And then there's only 4. There's only higher out of range, higher in range, lower in range, and lower out of range. So gap up and gap down, and then 2 in the middle. We'll talk about that in a minute, because this open type will indicate which statistics apply to these session prices. And these are the session prices, which are pushed directly from IRT to Bookmap. And nothing about any of these is mysterious or magical in any way. As much as I would like to convince you of that and have you send me money like most internet gurus do, that's the truth. The POCs, nothing special at all. They simply mark the price at which the most contracts have traded so far in the session, period. We've traded 2,692 contracts so far in the full session. The minute any one of these prices says 2,693, this yellow line is going to move there. That's all there is to it. The IB high and low also bother people from time to time, and it's because of the acronym. Initial balance was the old market profile term. All these 2 levels do is mark the high and low of the first 1 hour of the RTH trading session. That's all. Then I have the VWAP, which is the volume weighted average price, 1 for each Globex and RTH session. Excuse me. And of course, there is a POC for the RTH, and there's a POC for the full session. Now, the full session is a little darker yellow, and the RTH session is brighter yellow. Every night, about after the close, between 16 and 1700, I clear the column and put this flag in, which marks the most recent naked volume point of control for an RTH session. This is the price at which the POC closed yesterday. Right there. That's all there is to that. Here's our open. There's our develop. Now, developing value area low or high compared to value area low or high simply means that with the D, the developing is the current auction. The value area high or low is for the previous auction. And I update my IRT charts after we open to be RTH or day session only, so that through the balance of the day and these levels, which are pushed to all these other people that use them, the value area high represents yesterday's RTH session. And then I do have one other line down here I almost forgot about, sorry, the mid. And this is the mid for the RTH. Then, then the rest of them are straight up easy, right? High, low, whatever. And you can figure out the abbreviations pretty easy. Previous RTH high. Settlement, pretty important. Open, developing, overnight low. There you go. Real easy. There's no indicators on my charts or my Bookmap. So it's all pretty straightforward. Let's look at how the statistics work now. They come from this study in IRT. Again, there's only 4 open types: gap up, gap down, and in the middle. And we've determined by, a minute ago, we agree that likely we will open higher out of range. So this whole system is, once again, very simple mathematical statistics. It's nothing magic. The system looks back at 2,000 days, or this study looks back at 2,000 days. Of these 2,000 days, we opened higher out of range 513 of the days. Of the days where we opened higher out of range, price revisited the overnight volume point of control 413 times, 80.5%. Overnight volume point of control, 80.5. And a little bit off. Okay, excuse me. Did I move it? There you are. That's all there is to it. You determine the open type, and that determines the statistics from that look-back study over 2,000 days. These are not hard, fast targets. These are simply the next one, and then I'll just go down the list. Overnight volume point of control. Next order of business is the overnight high, 77.6, right? So the overnight high right here, 77.6%. Now, be sure you understand, it's real important to understand. I'm not talking down to anybody, but I want to stress the importance. These are not hard, fast targets for today, lines in the sand. This is statistics, and probably the most important thing you hear every day of your life as a trader, one way or the other. Past performance is not indicative of future results. Everybody blows that off as some lawyer boilerplate crap, and in reality, that's very, very insightful statistical information. The outcome of the very next trade is 50-50 by statistical fact. It's a binary system. The trade can, the price can either go up or down. That's all it can do. Time, or the horizontal movement, is only applied by us as people in the form of time. And all of the results historically, all of those 2,000 days up to today, are meaningless when it comes to predicting the next outcome, because it's 50-50. Now, is it very likely, and has it been very likely over the past 2,000 days that price revisits the overnight point of control? Yeah, it has. It's been likely 80.5% of the time we have done that. So that is a relatively high probability. And now you notice that these suckers are going to bring it down and get back under the previous RTH high, meaning that we will not be higher out of range, that we will be higher in range. So what I'm going to do at this point is not put the rest of these statistics in there, because I get so sick of doing that and then having to turn around and change them, you know, when they're right on the cusp like they are here. One thing else I'll point out on that subject, the gap up and the gap down are pretty significant in some areas. However, for example, the overnight POC gap up is 80.5, and higher in range is 89.9. So that's 10% more frequent. But then the further down the list you go, the numbers don't vary as much, and on the two inside numbers, they don't vary much at all. Overnight POC in higher in range is 83.8, and overnight POC in lower in range is 83.8. In that case, identical. So, you've got to take all this into consideration, step back and look at the bigger picture. I'm going to stop putting all these statistics in here now, because the second I do, then we're going to turn around and open, and all of a sudden it's going to be lower in range rather than higher out of range. So this will be significant in that we will not be in a gap situation. So the gap rules will be off the table. And Therefore, I'm going to stop doing this right now as far as inputting the statistical values. Hopefully it's clear how that works and why. And then I will also change the reason I changed the title of this column is so when I look at a screen snap or look back at the stream recording, I know immediately this tells me a lot of data right away, right? You know, and then I've just explained what that data means and why. So that's just a heads up for me personally. And remember, this is my trading journal, so I'm talking to myself here, you know. Okay, now I think we're probably fast approaching the 8:20, and that means it's TLab time. And the TLab is a Bookmap Discord chat room called the Traders Lab. And I have to navigate there now, and you'll see why I do the stream like I do, because I don't multitask worth a damn. That's what I said early on. There we go. All right. So every day I put two primary inputs or posts in the Traders Lab. But first of all, what is the Traders Lab? It is a Bookmap Discord chat room started by a fella named Tom B, who is a professional trader, 46 years experience. Of course, I don't know that as a fact, but I believe him. You know, I mean, there's got to be, and I do believe him. And I believe that he's successful. Now, have I seen a wrapped Maserati or, gold chains? Of course not. But just in general conversation and, things, I believe that he is a successful professional trader. And more importantly, I believe he has a genuine desire to help struggling, developing traders become successful and develop their business. And one of the reasons I believe that, and one of the reasons I stuck at the TLab for as long as I did, was absolutely nothing is for sale, nor are you ever solicited for anything, including subscribing to Bookmap. Now think about that for a second. It's the Bookmap Discord server. Obviously, it is a Bookmap marketing tool, and they don't require you to be a Bookmap subscriber to take full advantage of the Traders Lab, all of this, resources that Tom has pinned, or Ned has pinned at the top and all that kind of stuff. So I think it's probably one of the closest, besides this stream, one of the closest to straight up honest analysis and advice as you're going to find about trading that I have bumped into, let's put it that way. And I only make the recommendation for the Traders Lab. There is a link in the description here to join the Bookmap Discord server. Obviously, you've got to do that. And then once you do, navigate to the Traders Lab, Tom B, right there. There's the post that I put in. And about 6, I typically, in the morning, I usually post the numbers, okay? So there's that. Now, what I was going to say was I only recommend the Traders Lab because I certainly haven't been to all of the Bookmap Discord chat rooms, and I believe there's a lot of them. But the 2 others that I did visit briefly were just pretty much normal internet guru stuff. About the third word out of their mouth was trying to sell you something from their website or their mentoring course or whatever else. And that's perfectly fine. If everybody, if that's what they want to do, that's what they want to do. That's their business. And if Bookmap wants to support them in that, that's Bookmap's business. Certainly, I have no comment, good, bad, or indifferent about that, but I'm not interested in it. So I find that, and also I believe that if your ulterior motive is not to improve, sell something, then your motive could be genuine in that you're trying to help people, and that's what I believe Tom's up to, and the Traders Lab. And there's also a good crew of people in there: Rod, Ned, Lefty, Antonio, Killaton, who I've started to get to know a little bit now. Didn't matter. Garrett, and there's a lot of people, and obviously I have not named off all of them, but those are the names that just jumped into my mind at the moment. And the basic environment there is adult and focused on developing trading as a business rather than, romper room or, let's shoot off a bunch of flares and make a bunch of noise kind of crap, which I don't have time for either. So there you go. That's the Traders Lab. Now we are at 26 past the hour. And the next thing that I need to do that's pretty important, I think you'll agree, is be able to trade. And how do you do that? Well, on Bookmap, the first thing that you need to do with Bookmap is or any program, IRT or anyone else, but this is how you do it on Bookmap. You need to activate the trade control panel by clicking this padlock. And then you need to select the method you will use to trade with this application and your mouse. If you select chart, the only place you can trade with your mouse is in this active, I think they call it active or live data column. If you choose the dome, the only place you can trade with your mouse are the dome columns. Both, obviously, is both. Now, there are always buttons like cancel all and flatten all. Okay, that's irregardless of what you've chosen to do. I should probably remember to do that, to mention those before. And another thing is that, I'll get to it later, but let me continue. Once you've selected a way you're going to interact, then this padlock stays open and the button turns green. In my case, I need to go one step further because I use multi-brackets. And I use a risk-neutral trade management system. It needs to be even numbers of contracts. This is the minimum, obviously. Package size you could have is 2. And it's real simple. The stop for the entire package, in this case 2 lots, is at one location, 12 ticks, which is 3 points in the ES. Then the risk neutral scale, the T1 or the first scale, is at the same number of ticks as the stop is, but in the positive, obviously, and for half of the package. One contract, the total package is 2. The minute this target is achieved, your trade is risk neutral. The worst possible outcome you can have is a scratch, unless you move your stop away from entry and then you've got other issues to deal with, before. But if you follow this package and leave it alone, that's what it is. Now, if you go 4 lots, what is it? Well, 4 lots, there's 12 ticks. And the stop size, this stop location, you need to determine yourself with your back testing or your homework away from the live market and have a level that you have concluded optimizes your risk parameters, your requirements for your account size, etc., and can be ATR, can be harmonic swings, can be chicken bones or voodoo, whatever it is you do, but you need to optimize away from the live market. Okay, typically for most traders, it's dictated by your risk parameters. The ultimate goal of a trader is to be able to trade tomorrow. If you've got the most fantastic strategy in the world and you blow your count up today, guess what? It doesn't help you tomorrow. So you need to definitely approach this from a risk management point of view, account preservation. And that's you figured this out, okay? In my case, I've landed on 12 ticks, and then my risk neutral T1 scale is positive 12 ticks for half of the package. Then I have 2 runners for the 4 lot. That's all there is to it. And the next thing I also do is the multi-account story over here, which is, and tick that and close that and go up here. Now, what did I do there? Well, that is, where am I? Ooh, we've opened. Okay, sorry about that. I'm busy talking and we've already opened and I didn't even notice. And this stupid thing, there we go. Now it's reset. And the first thing I'll start to do is make sure that this is right. And then start flagging my migrating VPOCs. Well, I was busy talking about all that entry stuff and I didn't even get there. Now I have to continue. Okay. I have selected my package size, and the last thing I do is confirm the package size over here in the trade control panel. And then I click the button again. That gives me my real estate back on my screen. And because you can also, I don't believe you should ever trade your P&L or have it visible. So what I learned from Didn't Matter not very long ago, was embarrassingly, was that you can select to have your numbers here in ticks or points rather than dollars. So I have this window visible again now. And when the trade control panel is closed, you have clear all and cancel all. So buttons up here at the top. So that's something to remember. And why do I track the migrating VPOCs, you ask? Well, because this yellow line will continue to print, obviously, all day, but pretty soon it'll scroll off the left of the screen. And so I want to try to have all the information I think is important to trade right here on the hard right edge. Now we have just tapped out this 80.5% probability now, and we know that it's going to be a little higher because where did we open? There's the open. There's the previous RTH high. So we opened not higher out of range, but higher in range. Okay. Same as yesterday. All right, now I'm catching up a little bit here. Sorry for that. Another thing I'm doing is, you notice this blue line. I'm adding a vertical line at the session opens. And then I try to, you'll see I can't multitask worth a damn. Okay, there's the open of this RTH session. And then I try to keep the entire session visible on my screen in the chart here through the day until I approach an area where I want to trade and engage with the market, and then I can easily zoom in. That keeps my brain focused on the context. It's real easy for me to get zoomed in way too close and get myopic here with Bookmap. You can get into, nanoseconds with this thing if you want to. So that's something that I would caution about. And here is the first one, and here's the second one, and we haven't traded further than that yet. Now I'll be right back. Oh, shit, you're right about that, Antonio. Sorry about that. Morning, Jay. Yeah, I'm sorry about that. I've been busy talking up a storm over here, and that big red light I don't even notice. Thanks a lot. What I was saying here was that I'm vetting, if this is a repeat, sorry. If I am vetting this trade myself, I'm working on the IBs at this point. To vet a trade yourself, you need to establish the setup and the qualifying criteria, and then capture a statistically significant data set of that setup and those criteria, however you do that, back testing, whatever, and ideally away from the live market. Then you establish mathematically if that setup has a positive edge or not. Edge, expectancy, probability, pick a word, they all mean the same thing. You know, if there's a 55% probability, if 55% of the time over 1,000 trades, I get T1 first, there's a 5% or 55 to 45% probability that I'll achieve with that exact setup and criteria that I will achieve the T1 target. And you can do the same for however you choose to manage your risk, and whether you want to use a risk neutral setup like I do or whatever, or just all in and shoot first, shoot second, shoot some more, and then see if anybody's alive. I mean, however you go about it. But I think it's important to have a plan and go about it following your plan. Next thing is, because I'm focusing on vetting the IBs high and low, the IB trades, of which there are 2, I got nothing to do except watch the market and narrate this thing until 9:30, because that's when the IB sets. This IB statistic isn't a thing yet. So that kind of relieves the pressure of, what am I going to do now? What am I going to do now? Is this trade? Is this trade? I'm waiting for 9:30, and I'll see that set up. And then if I feel like there's a trade opportunity there, I'll take it. Otherwise, I won't. And I won't trade something else all day. That's how I'm approaching this. And everybody does it different. And there are guys on the TLab and other places that trade like they're killing snakes, and it works out fine. I think Tom takes a lot of trades. I don't know that, but I think so. And that's great. And then the plan then becomes, after you've vetted the IB trades, for example, then you pick the next one and you do the next one until you've got a more or less a playbook of trades that I think apply in a directional market, trades that I think apply in a rotational market, and you can use those to take more trades, make more money. That's the whole idea. Treating trading as a business, a statistically driven business, and achieving consistent profitability rather than whipping and spurring, rodeo, video game. Pick the one you want to use. Yeah, I got a subscription endemic and stuff, and earlier in the week I had background music going here too, but it's kind of that house trance stuff, and I'm not sure that that's really music that makes me feel better. But yeah, I think that I'm working, definitely. My plan is to have a background, very, very muted background music here to kill all the dead air time, Antonio, and I think it does help you focus. But with me, for example, lyrics, I start singing along, and I forgot what I'm looking at, so that doesn't work. And classical is good. Sometimes jazz is also good. And we are basically, what are we doing? Well, what would you say the context is at this point? Yeah, I don't think there's a hell of a lot of question about it, is it? It's up. And we're not very rotational. We haven't rotated down yet. if you're trading, the VPOC migrations, well, I guess you're probably doing okay. But so what does that say to me? Well, if we continue on in this vein, I won't be looking for the IB failure, because it looks to me like we're trading directionally, right? So that would mean, and I wouldn't be looking for an IB short off the bottom. I'd be looking for an IB continuation trade around the top, just standing here now looking at the market after, 23 minutes. Don't know. Yeah, slow jazz works good. The reason why I can't do it on the stream is the copyright stuff, and YouTube is real big about that. That's why I've been struggling with. There's some great, for just you at home, you yourself, there are some great focus, slow jazz focus trading music, some of them are even called. But I tried using one of them that did say royalty free, and there was a copyright strike. So from YouTube, the YouTube algorithm apparently goes through every stream that's published and figures that out. So yeah, but I think it's a real good way to go myself. So good for you. Now, who knows what's going to happen in news world here, or Insultville, or whatever else. We don't really have any more news, do we? Well, we do have the housing market index at 9, and the House vote on stablecoin. Are you kidding me? Can you believe that we're actually legitimizing crypto at a government level? That's just every, drug smuggler on the planet and cartel guy is clapping. It's amazing. That's the only part about crypto that I think it's a scam. It has not fulfilled in any way its original intent, which was to be used as a day-to-day currency. It's turned into a, buy and hold asset. And much like a Ponzi scheme, the value only goes up because people continue to pay more for it. And it seems, reportedly the biggest use is for illegal activity because it's transparent or not transparent. I don't know. I've never bought any. And, and again, like not buying Amazon or Microsoft or Apple when they first opened up, it's, I'm sorry that I didn't buy a couple thousand Bitcoin, back around 2016 when it was $10. But yeah, I don't think that it certainly hasn't lived up to what the original expectations were. I don't think. Maybe I've missed the point completely. But anyway, so news looks like 9 o'clock. Then we've got a talking Fed, and then of course we've got here comes the tweet bombs. We've got a scheduled White House press briefing at 12. But, like yesterday, all of the impromptu insults and stuff, or who knows what'll happen there. Yeah, there's some really, really nice long playing stuff you can use for yourself, but you just can't, I can't stream it. And that's good, good that they're protecting the rights of the artists and all that stuff. I have no problem with that. It's a hassle for me to find the right stuff. What do we got going on with IRT? Let's see here now. Well, I wonder what the context is. Oh, maybe up, huh? Expected move, daily expected move is 63.2775 to the top, 62.72 to the bottom. This is based on the implied volatility of the next day strike. Something I'm just trying to figure out how to do or use or whatever else. Our micro composite here just continues to drone on, and we've now come across this micro composite VPOC, which we just peeked through yesterday, and then with that big flurry of negative news, we had the sell-off, but it got right back to a doji, which is essentially complete indecision as I understand it. And today we right off the MCVPOC and up. So let's see what happens. Basically, we're green across the board. Up, not a full percent anywhere, but. And what's volume doing? Relative volume's a little light. Harmonic rotations. Open interest. Now, the VIX expired yesterday, and today or tomorrow is going to be the SPX and other option expiration, the third Friday of every month. Not triple or quadrupling or anything like that, but. And we are, up to our eyeballs in earnings session, which I don't like, actually. And as far as I'm concerned, it's, we are at about 20 handles wide now. Right? There's 02 to 22. And if you're trading the VPOC migrations, so far you're doing well. And much like recent days, if you just went long, figured, okay, we're going to go long off the top of this thing and went long anywhere at the open, we haven't even come close to the IB high again. So, I forget whichever day before yesterday or before that, if you just shorted the IB high and went to bed, you had an auto liquidate at 315 or whatever, 1515, you'd have made a killing like 60 or 70 points. Never had a moment's heat, ever, in that entire day. I'm not suggesting that that's the right thing to do, and certainly that is a function of the internet guru talent of rearview mirror trading. I didn't recognize that at the time, and certainly only looked at it in the rearview mirror. Well, if I could figure out the way you get paid for rearview mirror trading is to be an influencer or, have a big following, and I guess that's how it works. I'm not in that boat, so I don't know. And the IB, I guess, which I've been talking about here for a while, in case you don't know, or for the point of the stream, the initial balance statistic is first and foremost, not valid or active until 9:30 because the initial balance high and low are simply the high and the low of the first 1 hour of the RTH trading session. They continue to move down and up as with price until 9:30. Now, after 9:30, when that statistic is active, There is a greater than 97.7% probability in all four open types that the high, IB high or IB low will be exceeded by price in the balance of the RTH trading session. I find that a hard statistic to trade, even though it's, you know, pretty in favor of one way or the other, because you don't know if it's the high, you don't know if it's the low, and you don't know if it will be in the first nanosecond after 9:30 or the last nanosecond before the close. And a lot can happen in the middle of the day, and especially in this environment of random tweets and stuff, you don't know. So it's not a slam dunk as much of a slam dunk as it sounds, but that is the IB statistic. And then I've already described the two trades around that, which are the IB continuation or the IB failure. And those trades are what I'm vetting. In other words, I'm only taking those trades and keeping track of those outcomes for my own records or my own data, my own statistics, shall we say. I'm still using the risk neutral system because that risk neutral scale I find is a huge relief psychologically and clears up my thinking for trade management and all of those things. Rod refers to it now as training wheels, and he's taken them off, and he's not doing the risk neutral thing anymore. Supposedly, I guess he's been on vacation this week, but and basically trading to his targets. In his opinion, or in his what he says is that it in addition to increasing his profitability a lot, it's in order to do that, he's had to really focus on only taking A+ setup trade setups. So his trade frequency has come way down to maybe 1 or 2 a day from 3 or 4. So there's that. Well, the liquidity I see living here is our old friend around the 63s, right? So we're at 63.30. There's 200 contracts up there. But yeah, if you look at 200, 300, 4, 5, 6, 7, there's about 700 contracts or 8 of liquidity laying around in the threes. It's pretty vacant up here to me. That expected move is an interesting thing, and it is, basically the way that works, as it's been explained, is that there's a 62.5 or 8%, in other words, one standard deviation, that we will remain within those expected move parameters for the day in the case of the daily expected move, or the week in that one. And I'm just seeing how that works out. That would be these levels over here. And I'm not even absolutely sure I know how to do the calculation to apply these levels. So I'm not saying much about it, but I need to have it on my chart so I can see, just have something to look at. Once I really do know that, then I'll talk more about it, I think. The NQ, what has it done? Well, it's a little bit less rambunctious than the ES. Pretty much rotational, right? We rotated right down to the previous value area high and turned around and went the other direction. Over here, we opened just under the previous value area high in the ES and have just traded straight up since then. I think that There was a lot of numbers out, but there wasn't much movement around them. That was kind of interesting. I'm not real sure what the market might be waiting for. This VPOC migration continues to move. In my opinion, as I said before, I think they're just tickled to death. They're looking at these juicy highs up here, and those RTH guys cannot stand to have this this record stand in an ETH in the ETH. That's what I think. My strategy today is to continue to vet my IB trades, and with this context that we have so far, there's the Globex VWAP, there's the current VWAP, there's the IB high, there's migrating VPOC. I don't know many other ways that would make it clearer that the market context of the day so far is straight north. Meaning that I would not be entertaining shorts. Harkening back to Tom's retreating army and all that stuff, those analogies. It just makes sense, right? 9 o'clock. Well, here's Rod IB30. Now, what the IB30 is a TLab thing cooked up by Rod, who does a lot of great coding, static, and also statistics, which he shares frequently in there. And he determined that the high or low of the first 30 minutes it's not 97%, but there's 97.7, but it's in the low 90s at the last time I knew about it, percent that the high or low of the first 30 minutes will be exceeded by the high or low by price in the second 30 minutes. And so those TLab folks call that the IB30. One of the things with the IB trades, and including the IB30, look at these VPOC migrations go. Boy, Antonio, you must be filthy rich by now. I used to try to anticipate the statistic and trade to it. Absolutely not anymore. In other words, if once we get through fussing around up here and wherever the IB is, I would think, okay, we're going to take that IB high out, and I would trade into that rather than let it take the statistic, test back the other way, look for stops, and then continue on. Or in the case of a rotational day, mean revert. But I discovered from my statistics that trying to anticipate that or trade the statistic, I don't know how to say that exactly, didn't work very good. Well, the expected move is the way I saw someone do it originally was to take the open, RTH Open, and then add you can calculate it via the part of Black-Scholes to calculate it yourself, but there's a couple of sites. If you have Thinkorswim by Schwab or a lot of different sites, and there's another one I found, which I'm trying to remember the name of, right here. Oh no, you can't see that. It actually shows the expected move for the different strikes. So what I look at is the SPX, which is the options for the S&P 500, and then I look at the next in the 1 day strike, the next day's strike, and see, they actually have a column called expected move, and it might be like, say, 24 points. So what I do, and the way I saw this, Anne Marie, I think, was the one that I saw do it originally. Add that expected move for the next day to the open of the ETH, and then I plot that over here. Ooh, are we looking at? No, we're not. Then I plot that over here, and so this would be the expected move of today from yesterday. I know and I found another. I mean, you can Google it, right? And it's based on the options, strike, and implied volatility. And there's a formula for it, which I forgot, but it's rather complicated formula. But you can actually work it out yourself. But I found this website called, I'm trying to figure out how to show it to you guys. And I'm a little hesitant to do that because I have no goddamn idea if it's real or, if it's really working or not. But where are we? Okay, here you go. So this options chart, I do the S&P 500, right? Expected move. There's the implied volatility, and this is based on the implied volatility. So if this were tonight and we had just opened the ETH session, and this is tomorrow, right? This is the 18th. I would add 29.22 or say 29.25 to the open price of the ETH and subtract that from the open price of the ETH. And those two numbers would give me the expected move high and the expected move low for one day. Now, what I did for the weekly one, which you can see over here, there's the expected move daily, and the weekly one is somewhere around here, I thought I had the weeklies on this one too, but I guess maybe I don't. Hold on. Maybe I didn't continue those. Because I was trying to make sure I had the daily figured out first, but then the weekly move, Sunday night, I look out 5 days. And, like I said, this is just me trying to figure this out. And I obviously don't have the weekly on here. That's pretty weird. I thought I did. Huh. Anyway. And I have, once again, I have no frickin' idea, A, if I'm doing that exactly right, and B, if it works. I mean, there's a million wives' tales about all these magical stuff that's going to make you millions of dollars. Typically all being generated by somebody who's trying to sell you how to do it. So I've been sort of hesitant to say anything here about it, but I figured I should explain what these lines are and where they came from. So we'll see. And they change every day, right? So looking backwards, they're going, oh yeah, look at here, it did this and this and this. That doesn't mean anything because yesterday it was somewhere else. This is the expected move as calculated last night for today only. And we'll see what happens. What I've been able to read from the options point of view and the expected move based on implied volatility is that, again, it's based on standard deviation. So those moves should end up being the standard deviation around price, the strike, and therefore 62% of the time, or one standard deviation, price is contained within those two lines, within those parameters. That's the way I understand it. Something to think about anyway. Something else I've noticed just yesterday and today, or day before yesterday and today, Tom is now over in the TLab. He's posting screenshots of actual trades with the trade, lines, orders and stuff on them from Bookmap, which I think is really great. I hope he continues that because I think that will be real helpful to a lot of people. I've never seen that before that I was aware of in all of the time I've been there. So that's pretty cool, I think. All right, oop. And here we are. Boomity boomity boom. Ooh, we got a crazy Ivan up here at the top, though. Look out. Right at that previous NVPOC from the whatever day it is, the 1st of July. Taken out long ago, but, you know, it's funny how those things happen, isn't it? I mean, right exactly on top of the high volume node, that naked volume point of control, and yeah. Let's look over here what that looks like. So there we are. I mean, it was taken out day before yesterday, obviously, but you know, obviously that it still remains a level, I guess. Yeah. Remember that this chart is only this micro composite is a day session only. So the real all-time high is above this 41.75. It's 45, 42 or 3 up there. But it was put in the overnight. And I, you know, who knows? Remember that it's a random market and the outcome of the next trade is 50-50. So really, like we were talking, I think last night, you know, it's time frame is so important. You know, the algos are trading in milliseconds, I guess, if, you know, you believe what you're told. We look at the daily time frame. Swing traders are looking at weeks out, and we were talking last night, you know, well, so if you're 25 and you invest $10,000 in the S&P and stand back, it's going to go up. If history repeats itself, it's going to go up about 8% a year. There you go. Do that for 20 years and you've got $1 million, you know. It's all time frame and it's all relative. Look at that, huh? 1, 2, 3, 4, 5, 6, 7. Bang, 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 bang. And down we go. Now, this would be a mid reversal. This could be a mid reversal in static world. And also, Tom, right? It's the VWAP to VPOC or the mid to VPOC possibility. And it would be in alignment with context, which is up. And I need to get this wide down back to the dollars. There we go. It wouldn't work for my range requirement, which says that I need to have an unobstructed path to my risk neutral scale. And if you got long hair, you got the developing value very low in the way, you got the VWAP in the way, and you got the overnight high in the way. No way, at no point do you have 3 points free, unobstructed to the target, which by the definition of that trade setup is the point of control. So again, you know, it's just you can make a point for any trade either direction and whether to take it or not. And that's the hard part for me about trading. That's why I'm trying to be so focused on just the IBs. And even doing that, there's so much discretion when it comes to just trading the IB. Does it go through? The stats taken, you come back through it. Okay, is that a stop sweep or is it going to continue? You know what I mean? I haven't figured out any way to trade absolutely system driven. I'm in real awe of the guys that code the algorithms that can do the profitable trading at whatever time frame, because in order to do that, in order to code that system, it cannot be discretionary, right? It is a coded system. So how they do that is awe-inspiring for me. I can't do it thinking about it. Never mind writing it down. In a sense, I guess I do, because when I do the back testing in IRT, the entry system is, you've got to have that coded up, right? And it is not arbitrary. It just, whatever you put in there is what it does when it back tests. So I guess in a sense, but then I am not nearly as consistently profitable with those as I understand the algorithms are. And maybe they're not either. I don't know. In any case, funny how yesterday we just poked our nose through that that micro composite VPOC, and then had the big insult dump down here and ended up right here at the doji. Today we just opened right on it, traded up a little bit, and now what's going to happen? I don't know. Interesting. And if you look at the bigger picture, what are we doing? Well, we're just rotating back and forth. These big moves typically are based on some sort of random tweet stuff. So that's not really market generated information. That's what makes this environment extra tough for me. And what are we doing now? Well, oops, we're rotating. So we were context up for the first 45 minutes, and now what are we doing? Now we're rotating, right? Still, if we depending on what we do right here, technically we're higher highs and higher lows. But here we go with that discretion, right? The joy of trading, as Tom would say. Well, here we are at the Globex VWAP. And we went down and just poked the previous RTH high. Notice that? I just did. I hadn't before. Whatever that means. Get your trading gear ready, your fingers on the mouse. I'm going to go get some tea and stuff, and I'll be right back. The IB statistic is just now setting. And what have we done? Well, higher highs and higher lows. I don't mean that the IB statistic has been satisfied. I mean that we are now gone past or right at 930. So the IB statistic is now active. Will it be the IB high? Will it be the IB low? We're pretty much at the mid, right? Just a little skew to the upside. Hmm. So my thoughts here on the IB high are we're kind of looking like that's now we've had a VPOC migration lower again. So, but I always think about the old analogy of, you beat on the bottom of a bucket and pretty soon you knock a hole in it. That's one way of looking at it. And as I said, you can argue both sides of every point of view in trading. It's gonna take out the IB high and move higher concept. Also, there is the other side, which is, well, yeah, this is a big area of resistance. We've traded down, but where are the thing I think makes most sense to me is where are the stops for all of these shorts? They're living right around up here someplace, in my opinion. That's going to be fuel that if we get through that IB high, take us to higher ground. And maybe that's a negative way of thinking about it, but I try to always think about that. There's got to be a bunch of liquidity or stops or fuel or whatever word you want to call it, living around 24 up. And coincidentally, there's 424 contracts at 63.25. Having said that, of course, it's pretty damn range bound, isn't it? Like they're waiting for something. Holding their breath or whatever. I have no idea what that thing they're waiting for might be, but anyway. Funny how they just ripped right up there to that previous NVPOC and high volume node and spun around on a dime, isn't it? a statistic that I think about often in these situations. Okay, it's greater than 97.7% probability that we're going to take out one or the other. And I think it's, I don't know, 32 or something like that percent that we take out both. Stand by. Okay, call me a liar. 31.9% that we take out both. But what does that mean? That right now in this open configuration, it's 98% probability that we take out one or the other. So that means there's a 2% probability that we don't take out either. That's pretty low. Obviously, this is real early in the morning, but you know, if you get down around the last hour or 30 minutes and we get near one of these two IBs and they haven't been exceeded yet, that's a pretty safe bet. I think that's a pretty high probability to trade that direction. Just another way to look at the statistics rather than, oh, well, it's going to do this, so I'm going to go there. I mean, what's the probability of if it doesn't do that? If this, then that. If not, then what, right? Well, what'd they do? Exactly nothing. Okay. Well, it looks like they're winding up for something, doesn't it? We got lower highs and higher lows, I think. Oops, where's the right mouse go? There we go. So we got lower highs and we got higher lows. So it's basically consolidating and winding up tighter and tighter. What that means, you would suppose that that means it was coiling up for a break one way or the other. But we come up here. I don't know how to draw lines in this thing. I guess I could figure that out maybe. Mm-hmm. Is this? Oh yeah, there you go. Oh shit! See what I just did? Out of sheer stupidity, I clicked inside the active data column, messing with this line, and instantly was in an order. Now, the fastest thing I could think of to do quickly was flatten that out immediately. Really stupid. Well, that's going to put me off my game for a while today. I'm going to definitely stand back and think about this and not worry about ever trading these stupid... I was thinking about drawing these. There's a thing to show these how this consolidation was working, and boy, was that a bad idea. So there you go. And maybe maybe I got somewhere. I don't know. I don't think so. Am I in or out? I'm zero. Zero. Okay. Well, that was except for commissions, a wash. So that was quick enough, I guess. And now watch it go ripping up through. Watch it go ripping up through the top. That's the reason why, for the longest time, I didn't have this. I only had the dome columns activated. I haven't made that mistake in a long time. I guess I'm not, still haven't recovered completely mentally. At least I was quick enough to react and get up there and close it out. And now it would have been a winner, right? But my belief is that absolutely, if it's a miss key or a fat finger or something, don't take any possibility of, oh, I'm going to wait and see. Well, I'm in it now. Let's see what's going to happen. In this case, it's going up. So that would have been now scaled, actually. No, not really. Close. Would have been close to a scale. Yeah, because there would have been the scale target right there. But that's certainly not a planned trade and certainly not anything I recommend. The course of action for me was exactly what I did, which is flatten that out as fast as possible. Close position, cancel option, open orders. You definitely don't want to do this one. You want to do that one there. I want to do that one there. And I have a hotkey for that also. But since my hands were already on the mouse-a-rooney, now watch it go up to my target. It has hit my scale without any heat. Oh yeah, the joy of trading. And here we go. Cool. I'd be pretty proud of myself at this point. I would have liked to say that was an intentional trade, but it was not. So. Remind me to not draw any lines. And here's the VPOC migration. Wow. So I should have just stuck with it. No, not at all. This is probably one of the few times I can remember where it worked out. And I can definitely remember the number of times I thought, oh, okay, let's see what happens. Let's see what happens. And you take a full stop. You're long and you went flat on the VPOC migration? Huh. Wouldn't that be kind of confirmation of continued up move or no? That's what I would think. And notice that it's just back up here to where it was. Okay, well, that's nice. Good. Good for you. I was long for 14 there at 14 for about a second by accident. And if, and now I would be a rock star. One of the few times that a mistake like that would have panned out to the scale, and then, helmet and put your feet up and see what the hell happens next. That's quite a confusing VPOC, isn't it? So my mistaken entry right here. Oh, I should have put that over here in my thing here. And what would I call that? And that is about, where am I now? 45, 53, 8 minutes. Yeah, so there was the mistaken fat finger entry, or the actually mouse mistake. And there's the scale. So I would have been risk neutral and in a position to let this play out or not. And my estimation of the market and the price action right now is that it's going to come through this and get up there to the IB statistic. But this is certainly not truly gambling if you don't do as I did, which is immediately flatten that out the second you notice that you realize there was a mistaken entry, unintended entry, unforced error, I think they call that in sports. Okay. And the Globex VWAP, I guess, yeah. Well, that was in alignment with context, I would say. So, yeah, and you made money on it. So, what's to argue? If it was a trade that you plan to take, then there you go. If it's in your trade plan, not to sound like Tom, but you know, I guess if I said I could have said this was that, but it wasn't. It was it was an unforced error, entry error. And may well work out in the end, because notice where my second take profit would be, just up here above all that liquidity, which is still laying at 450 or 449, is still laying there at a 63 quarter. Gets up there and takes that out. Well, there would be a full trade to both targets, but rear view mirror trading and an error. So I did exactly what my plan is. Immediately exit an error, immediately close it out. And that's what I did. One of the most, I think, insidious things to hinder your trading is when you make a mistake, like, for example, this one, and you don't follow your plan and it works out in your favor. That is huge. That is a huge problem, because it reinforces negative behavior, you know. And I think, and I think as humans, I don't know, monkey mind, where the hell it came from, evolutionary or whatever, we remember the good stuff. You know, I'm forcing myself and my plan with a cool, calm mind away from the market decision to, anytime I have an error entry, to immediately flatten out. Because in reality, with a cool mind, I know of all the times that I thought, oh God, look at that. Oh, what's going to happen? And it goes to a full stop, you know. In this case, it's gone to a scale, and who knows what's going to happen after that. But that's irregardless of the point. And that would be a huge, hugely deleterious to my trade plan and my trading business, I think, to have let that run. And because that really reinforces the negative. I'm just talking about me. Remember, this is my virtual journal, so I'm not talking to anyone or about anyone other than myself. Yeah, there's naked VPOCs all over the place. I'm not sure. 83, yep. There you go. Right there. It's from yesterday. If that's the one you're talking about. It's actually 83 half. You see that? Or do I have it? No, sorry. Yeah, there it is. It's right here at 83 half. And that's from yesterday. And we got one down here, and we got one down here, and then, you know, we don't have any above us because we're at all-time high. And there's one here, actually. But yesterday's naked volume point of control is 83 half. I hear bing bong. What's going on? I'm getting something from somewhere. The God music, you know, boom, boom. Wonder if they're coming to get me. Yeah, 83.5. There you go. We got naked volume points of control all over the place, from back and forth and up and down. I mean, nobody says when they're going to be revisited. Absolutely. In my opinion, and it's absolutely my opinion. Hold on a minute. Let me go over here. Okay. All these red lines are naked volume points of control. Every one of these. And these are all naked volume points of control that haven't been traded through yet, including your favorite up here at 83.5. Nobody says that this is going to be a target right now. In fact, I'm just saying this is my opinion, right? Or my thinking. I think we got a much higher probability to go up maybe not today, but by this week, to go up and take out that new all-time high, simply because these guys can't stand having an all-time high or a record like that put in by the overnight, by the ETH. So the possibility of zooming down and getting the yesterday's naked volume point of control, we're a hell of a lot closer to the top than we are to that one, I think. But you see, these are all naked volume points of control, all these red lines. Obviously, these over here have been revisited. But yeah, I don't know, you know. And I'm not saying don't be spooked by that, or don't think that that's a valid. That's your idea, and that's absolutely valid. And you should trade based on what you think, I think, in my opinion. I just don't, and maybe somebody's got a probability of, you know, of that. I don't know. Got no clue. I don't even know how you'd have to do it based on, you know, revisited, naked volume point of control revisited within X amount of days or something like that. You know what I'm saying? It's, I don't know I have no idea how you'd come up with a statistic like that. But if you look at what is the NQ doing here? Wow, my goodness. Knocking on heaven's door at the top up there. We didn't have any interest to get into the previous range value area, and we've traded, basically we are continuing to trade higher highs and higher lows up and out of this today. So there's that. It's a good reason. I really think that the range, you know, the brackets are a great idea. Now, I'm pretty disappointed in the fact that I exited so quickly, right? There's my scale, and look where we are. I'd be thinking I was pretty cool, but I'm not. And where's our, you know, way down below us here, 40 points below us is that naked volume point of control. And now I've got to start scratching my head because we're approaching the IB statistic. So now I need to scroll in a little bit and see what I think is going to happen here. Because the trade that I've been waiting for, or stalking, or trying to vet, is becoming a reality here, perhaps. Well, then once you're scaled, then just let it run. I mean, you know, once you've got your scale, put your helmet on and let it go to your target or not, rather than getting worried about something below you and taking it off prematurely. So there's the scale. There's the IB statistic. Here's that big 400 lot that's now moved down to 200 lots. And there's my second target from this miscued entry. So I would be, you know, I'd be done trading for the day here in another couple of seconds. Shit happens, what can I say? And my IB continuation trade is not on the book. There we go. So there is the my target. But we haven't tested back to the IB. We just blew right through it. So that's not part of the plan. That's not part of the setup. And what have we got above us? This 250's moved up here to the 30s, right? And look what's just living right above us up here a little bit. Oh, Mr. All-Time High. 20 handles above us, less than 20. So, there's that. That is frustrating, no question about it. I would have loved to have that multiple target winning trade in the books. That wouldn't be legitimate. I mean, it would not have been a legitimate trade. It would have been a double winner on an unforced error, and that's pretty not good. And now what do I have to think? Well, we took out those stops that we talked about. All these little boopity 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 boop, and the people, you know, going short, baby. We're going short. Right there. Now we're going to come back and test the IB high. What do I do now? Got to get a lot higher for my targets. It's a pretty bitter pill to swallow here that I've made my scale and my target. Now I'm just thinking about an entry, you know. I got to be honest. I definitely need to be honest about that. And as we've migrated up our POC a number of times, that's pretty close, right? It's 5 handles to the POC, the most traded price of the day. Well, yeah, we came within a tick of it. We came within a tick of that expected move there. Wait a minute. Something doesn't, yeah, 27. Yeah, there we are. And the expected move is 27.75, so it's right there. And I want to be real clear. I have no clue whether that means anything or not, but I thought it looked interesting. I've Googled it. Seemed to be a lot of people talking about it. It's, you know how the internet goes, and especially YouTube. One person posts something about the opening range trade, for example, and then 37,000 people have the perfect way to do the opening range trade. You know? Just that's all they're about, is getting views, clicks, and likes. Now, I'd like all that stuff too, but that's what they're about. And I suppose if they got a successful trade in the meantime, that's good too. I'm still pissed at myself for A, screwing this up, and B, being aware enough to, to follow my plan and cancel immediately. Because I would be all done and proud of myself there. But I wouldn't be proud of myself, but I would be, count-wise, I would be done with that trade. Yep, take care, Antonio. Have a great stream. Good luck with that slow jazz. I hopefully will be able to figure out something for this that I don't get copywritten on. Would be so great. And I don't quite know. What I have not figured out is how do these people that post all these, music things do it and not get copyright written strike or copyright strikes. That part I don't get. Got to be a way. I don't know. Anyway, yeah, have a good one. Here we go, consolidating again, right at the IB high. I'll be absolutely honest. I'm leery to take an IB continuation trade here because the POC is so close, because we just had this movement, and I will be thoroughly pissed that I closed out and didn't get a scale and a target if I were to take a stop, to be honest about it. Now, I realize that's not positive thinking or proper thinking, but, that's what I'm thinking. So I need to be honest about that with myself here in the stream, in my journal. We got 2 1/4 sitting at 27, and $1.50 down here at 24 or 23. If you look at the day as it's developed now, it's rotational. And we've got a pretty much balanced distribution with kurtosis at both ends. Looks a little different over here on the bookmap chart, but looking at it on IRT, I would not be as convinced that it would be an IB continuation trade as perhaps an IB failure. The one difference about that, though, that gives me pause, just even saying that, this fractal with the low volume node here, and then look how close it is to the mean, right? So how far is the mean reversion going to get you? 4 points? Does it? This is all stuff that's going through my brain at the time. This is how I end up not taking trades. Very disappointed that I did that. I thought I had gotten past fat fingering these with this stupid active data column here. I don't like that price action at all here at this IB high in context for an IB continuation. So I'm going to really give this a think. And I'm still at one level, I'm still pissed about A, making this mistake, and B, sticking to my plan and closing it out as fast as I could. Not having taken any heat and taken both targets. But that's, beside the point. And I look back, I'm going to defer to the saying that there are no missed opportunities. There is only the next opportunity with trading. For my usual IB continuation in a trending or a directional market, part of the context and trigger would be to trade through it, get no place, and then trade back in the direction, which we have not done. And as GA pointed out there, we're right up against the expected move, whether that's assuming that's a valid line, and assuming that the theory behind those expected moves is that one standard deviation of the market price stays within those boundaries, meaning that it's a likelihood that we would trade back down. In other words, an IB failure wouldn't be a trade I would take, because the whole definition of the IB failure, the IBF trade, is that it is mean reversion. So mean reversion being here to here, that's not very far. I just don't think it's a very good probability in any directions. My original thinking for the IB continuation, if we had done so, was that we're looking at that high, those all-time highs. And if you look at the Renko chart, what's happening? Well, it's higher high and higher lows. But the profile is ending up being a pretty balanced profile with kurtosis at both top and bottom, and we're getting pretty wicky right here. Like I said a minute ago, you can, if you're relatively experienced with price action and trading, you can effectively argue either direction anytime, I think. And that's one of my problems, is analysis paralysis, I guess. I am very, very aware of the fact that we're at about 10:20, 10:30, which has been quite an opportune time for Trump dumps and random tweets and stuff to come zooming into the market, and that can ruin your whole day in a big hurry. There we did trade just through the IB high and didn't get past the developing value area high. Now we're up 1.5 points. I've been real quick about that. I guess I could have got an entry there. And if we can make 26, there's a scale. Looks a little bit dicey, though, with lower lows and lower highs in this consolidation right here. Seems to be a pretty heavy line in the sand at 27, also at the 230 contracts. pulling back on the NQ also. Not so on the ES yet, but this wick is, they haven't been able to get very far past that. And here we come through the IB high once again. Will we get into the developing value area low and drop? I'm thinking that that's what will happen. Too close to the RVPOC for the IBF for me. This is where the discretion comes in on any of these setups. And I suppose that, in a sense, invalidates the, to some degree anyway, the statistic. But I'm doing the best I can. So a long down in here would have not been scaled yet. Maybe here. That's flashing because I'm going past this line. That's just what's going on there. $26 is the scale. If you were, if you're long off the IB. Looks to me like they're trying to decide, somebody's trying to decide what to do. And don't forget that this is also the balance high from yesterday. Right here, this gold line. That's where trade would balance had this gone both equidistantly in both directions. And there's that measured move story. I don't know. What I'm saying here is I don't know. I don't know. And I think that I think I defer that if I don't know, that I should defer to sit on my hands. Now there's a scale. So it would have been scaled in risk neutral now, and then that's fine. Then all bets are off. Had I been quick enough to catch it right on this bottom. And that's all you got to do is reach the risk neutral scale, and then the worst you can do is scratch. So now, if these guys trade out or lift off, in my opinion, that will be removing the lid from the pot. This thing will go up. There, they traded it out. So in that case, the liquidity was a target, or acted as a magnet or a target or whatever. When we still got that 250 is lifted up now to 330 or to 63.30. What's going on around the world here? Let's just see. Oops, that's the wrong thing. Hmm. Okay. Slow grind up, huh? This fat finger. One of the few times I reacted quickly enough to cancel it. Both scales, both targets. Apprehensive here at this price action around the IB high, which would have been just scaled here. And then no real, which is all you need. Is once you've got that risk neutral scale off, then the rest of it is just put your feet up, put your helmet on, and watch. Yeah, that's good for you, man. That's the way to do it is, eliminate all the clutter. Just focus on one thing. It's like hunting or whatever you do that, is a good analogy. You don't go out, if you're deer hunting, you don't go out in the woods and shoot everything moving, or spearfishing or whatever it is. I have no clue, obviously, but if you pick something and make that your target and focus on vetting and doing that trade like we were talking about last night. Right here, this is my standard 2-lot risk neutral trade. That is, both of those being hit like that is 60 ticks in the E-mini. That's, if you convert that to dollars, that's $750. If you do that once a day, that's a pretty good trade. And it took, what did that take? What would that have taken? Well, let's see, 45 to 05. That would have taken 50 minutes. No, 20 minutes. I'm sorry, 15 minutes. Would have taken 20 minutes out of the whole day. And you're, done, locked up, money in the bank. That's, for me, that is the idea. Now, I'm not saying to only take one and quit, but for now, I'm only taking one primarily because I'm working on just these IBs. And I have worked out that IB trades later in the day past RTH1 have a much lower probability of success. So I'm trying to focus on RTH1, which is up until 1045. And that would have been sweet. Right here, also, you're scaled, but you haven't reached, I wouldn't, had I taken this IB continuation trade here, which didn't really meet the criteria for me, and so here I stand. I would have been scaled at 26. Say I got right in here, and I had a resting order. God, that's 26 is the scale. And you can go take a nap. It's either gonna hit your stop or it's gonna hit your targets. Case closed. Now, do I do that? No. But you know what I'm getting at. It just, you can be focused on that specific thing. You're not panicked. You're expecting it's setting up and getting ready to happen. There's a whole lot of things that help. And these are just all, it's nothing that I'm coming up with, or no revelations, This is common sense. Tom, the trader, that best loser guy, Mark Douglas, any of those, anybody, read any of this stuff. It's all statistics and probabilities, and the most successful traders in the world, Jim Simmons, Renaissance Technologies, all about data, and absolutely had an absolute rule to never hire anybody with an education or experience in finance. It was at one point the largest collection of PhD scientists on the globe working for one outfit, and they were all physicists and data people. And it was the most successful hedge fund in history so far. Tom Sosnoff, same thing. Everybody. Tudor Jones. Now, I'm not saying that they all are focus on one thing and narrow their distractions down, but they are all in agreement that it is a statistically driven business, that the idea is in alignment with the casino model to, have a predefine your probability and the specific rules, and then in the live market, take each one of those that presents itself. I broke my rule about that today by not taking this IB continuation here. But I was definitely thrown off by this error entry. And unfortunately, I reacted per my trade plan and quickly canceled it immediately. But that gave me pause to think about what I'm up to here. So that put me off over here, frankly. And then once you've got once you have a setup and a criteria identified and an edge identified, then you let the law of large numbers manifest to your side of the table. That is the exact model of a casino. And every successful trader that I know of, that I've read about or heard talk. So it's not like I dreamed it up. The point of that story is it's not like I dreamed it up. It's it's a fact. One of the funniest things I ever heard was FT71, Murad Askar, right? He was given this was a webinar on Big Mike somewhere around 2014 or 15 or something like that. And he, at that time, was using IRT, and he had pulled some data off of IRT and was demonstrating how to calculate the statistics. The IB statistic, actually, is what he was going to do. And he was using Excel and data that he had pulled off of IRT, because this was before, all the new, that's before Python was ever even a thing and stuff like that. And he had done all of that, and he made the statement that the first thing you have to realize is that it is a random market and that the outcome of the next trade is 50-50, and that is a statistical fact. And you would not believe weeks after that the chat had blown up and people arguing, you're out of your goddamn mind, blah, 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 because it's so prevalent for people to fall into what the casinos call the gambler's fallacy. And that is, there's been 15 blacks in a row. The next spin of that roulette wheel has got to be red. The probabilities are 90%. Absolutely not. Past performance is not indicative of future results. And 1,000 reds, blacks in a row, the probability statistically of the next spin is 50-50. And in fact, in roulette, to be honest, it's not 50-50 because they added a 00, green, furthering the skew to the casino. And in America, unlike Europe, they added two, I think it's a 0 and a 00. There's two greens, so it further dilutes the 50-50 skew to the favor of the casino. But, 1,000 reds in a row doesn't mean that there's any different probability in the next spin. Same way with the trade. It's a binary outcome. Can go up, can go down, period. That's why trying to predict, as Tom says so often, that's why trying to predict something is fallacy, because once you've done the statistics and you've skewed the edges in your favor as best you can, the outcome of that, even so you have a high probability, the outcome is still 50-50. So there's no reason you should beat yourself up or imagine that you're not going to take stops, because you absolutely are. Just like a casino is absolutely going to have winners. In a casino, a guy wins big. Did they run over and shoot the pit boss, come shoot the dealer, or change all the rules? Absolutely not. Congratulations, Screedle. Here's your money. Here, have a drink on us, and then they deal the next hand. Case closed. Because they know that it is a business based on statistics and the law of large numbers. Period. And I say this over and over again here in the stream because I believe your subconscious mind believes what you tell it. And I think that is a fact. And I want to continually reinforce those thoughts in my own mind. Now, here we go. I would be scaled at 26 off of this IB continuation, and we're now looking at 30. It's still, it's scaled. It's not close to the top yet, but look what's showing its little head up here now. There's that all-time high that was put in the ETH. The fact, are we going to get to 43 today? My bet is yes. And I would say that we'll definitely be there by the end of the week. Just because in my recollection and my experience, the RTH trading session, people do not like it when a big level, especially this is an all-time high, for Christ's sake. in the ES, is put in by the overnight. And that's where this was. We got pretty close to it. We got up there close enough to take out this naked volume point of control from the same day. This was the naked volume point of control for this high on the 15th. We've come up and taken that out on day before yesterday. But we didn't get the high. We got within a couple ticks of it, but we didn't get that record. And I'm guessing that's where they're going. And I'm really sorry that I blew this opportunity and didn't take didn't follow my plan and take the IB high in the directional day. IB continuation trade. And am I going to get on it now? Nope. Because it's got nothing to do with my IB setup. It would be chasing and FOMO and all that crap. So I wouldn't do that. Am I disappointed that I was a good boy, followed my plan and didn't get both targets? Yeah. And then I could have come over here and done it again? Yeah. But hey, hindsight really clear, eh? Rear view mirror trading, the stock and trade of the internet influencers, the gurus, baby. Yeah, it didn't do what I was looking for either, GA. I wanted it to test below the IB high. That's part of my, setup idea, and it did not do that. And you're right, me too. Doesn't mean I'm not, disappointed, but that is why I didn't act. That and the fact that, I'll be honest, I was put off by my failure, my mistake over here, but fortunately sticking to my plan to immediately close out. And of course, there's a lot of remorse about that because I would already have my two targets out of the way. But as I said earlier, we always remember the good stuff. We don't remember all the times that you made a mistake and thought, oh, that's good. I'll just let me see where this is going to go. And then it blows back in your face and takes out your stop. They say that is a built-in thing with humans, for example, childbirth. If women actually remembered the pain and all of that the human race would have come to a grinding halt long ago. But that's for some reason our minds have a facility of blocking out those kinds of thoughts and remembering only things, like I said, sticking with this mistake over here to both of these targets would have been a terrible thing for me to do because it would have reinforced an error or negative behavior. And that's really important to recognize, I think. And I'm going over that because I want to drill it into my own brain. This is, my virtual journal here. So that's the point. And we are just making this IB continuation is just putting right along lovely, isn't it? We're up to 31 now. 26 was our scale. And then we would be up at wherever the hell 48 ticks would be. About 36 would be 48, I think. That's 12 points, right? Yeah, that's why the bracket and the risk neutral scale is a real big revelation for me, because the second I have that risk neutral scale, all that emotion, all that baggage goes out the window. Huge improvement in my psychological capital, and which means ability to, manage the trade and not convince yourself that you need to take the stop now and, take that $5 profit now. And you start telling yourself, see profit, take profit, and nobody went broke taking profit and all that crap. So if you've got that bracket on there and you get your risk neutral scale, turn the goddamn mouse off or whatever. You know what I mean? And just now there is ways to trade manage. Tom even talks about it. Let's assume that we got long right here at the IB high. And we got scaled at 26. Now we've gone another 3 points plus up here. Tom's commented more than once, and I have been kind of experimenting with trade management in so far as to trail your stop. Now, there's a couple, 3 different ways you can do that. You could trail your stop right up here to your break even, or to your to your scale. You could, first of all, you could trail your stop to break even. So that means that your first target is locked in no matter what. Now that we're up here way past 3 points above our T1 target, you could trail up to T1. I mean, these are things that are possible, right? That I don't believe are out of the realm of reasonable trading. Because I think it's stupid to let a trade that's gotten 9 or 10 points in your favor blow back in your face. That doesn't make, just because it didn't get to my target. I don't think that makes any sense either. So I'm struggling with and wrestling a lot with this trade management after the fact, after T1 and all those kind of things. And several times recently, I've done exactly that, trailed up to T1, and it's come down and taken me out. Okay, I did make T1 for 2 contracts, 24 ticks, as opposed to 60 ticks. But the part that really got me was at no point in time did break even or my original stop ever receive any heat whatsoever before price got to the second take profit target. Now that's something that you would need to vet statistically. How many, and it would require, in my opinion, it would require a good back testing with software, because you can't go back and look at, I don't know how you're going to go back and look at a year's worth of data and come up with an accurate data set about how many times did I not move my target or my stop and it went to my second target? How many times did I move my stop to break even and it went to my target? How many times did I move my stop to break even plus T1 and it went to my target? Or did it come back and take me out? You know what I mean? There's so many variables there. I get tired of talking about it, let alone trying to figure it out statistically. So that's one that you need to deal with. But my first plan, what I'm trying to do is take this in steps. The first step is bracket order. The minute I get scaled, I relax and I'll leave the bracket completely alone. Now, day before yesterday, whenever it was that I had that good trade, after I was well past T1 and, at least 3 or 4 points past T1, I did bring my scale to break even. Maybe not the best thing to do, but I did, and it worked out in my favor and worked out fine to my second target. Because there is something that I have to think about. Figure the move on the expected move. Are you talking? Oh, that weekly expected move thing? Okay, sure. Let's see now. Hold on. Expected move. Okay. Yeah, it's still here. What I did was, it's based on the implied volatility, and there's a formula to calculate it yourself. But I found this website. The SPX is the S&P 500. This has the expected move already calculated. What I'm doing now, and maybe this is not correct, and I want to be really clear that I point that out because I'm not sure yet. For example, tomorrow I would look at the expiration or the strike for the next day, the expected move. And that would, in this case right now, if the ETH had just opened, and this is what this site had in front of me, I would say that the expected move is 29.22. And I take the open of the ETH and add 29.25, because there's no such thing as 22, right? I would add 29.25 to the open price for the upper expected move, and I would subtract 29.22 or 25 from the open price to get the lower expected move. And I did that yesterday, and I got this price and this price. That's, Google expected move, and you'll see all kinds of crap show up. I mean, it's not like a big secret. It's been going around for a long time. It's options world stuff, right? Which I am a real donut when it comes to the whole options thing, but it's based on implied. I mean, Tom Sosnoff and those guys talk about the expected move and vol and implied volatility and all that 50 times in a 1 hour blurb on the Tasty thing, Tasty Live or whatever they call it. So it's not like it's any big secret. But that's how I do it. So again, it's go to that site, which is called whatever it's called, or any site you find expected move. This particular one is called optioncharts.io. I just Googled and found that. And I was looking at the formula, which is fairly complicated with, square root of this and that and implied volatility and whatever else. And then I saw, well, but here it is right here. It's already calculated. And probably if you look at this website and go to the help or something, it probably gives you the formula of how this expect move is calculated right here. Probably. I haven't done that because I just use it and that's it. I've only been doing this a week. So it's not like, or two. So it's not like something I've got lots of history with, but that's how I do it. You take the open price at the ETH and add the next day's expected move from the next day's 1 day strike right here. Now, what people that I've seen, other people that I've seen do it, use the options chain and look at, from say Thinkorswim or whatever. But that's the bottom line. And if you find out a better way to do it and something more accurate, let me know. But that's just, I think I first heard about it from this Mary, what's her name? Anne Marie or whatever it is, who I think is a fairly intelligent, person, non-bullshit, and I guess successful trader. I don't know. But I saw that and I thought, oh, that's interesting. And I'm trying to learn a little more about options and stuff. So I thought that would be something interesting to do. Plus, I've also heard of, like I said, people on the Tasty Live or Sosnoff or any of those guys, Chris, or those people talking about the expected move. So it kind of rang in my ears, right? That's how I do it. I don't have any idea how to do that, how to trade that. And yeah, today it worked out. Go back a few days and it hasn't at all. I don't know that. What the theory is about it that I've heard so far is that it is like, it's a rare probability that price exceeds these expected moves. It is within one standard deviation of price movement that price stays within those expected moves. So, there's that. I think it's a Disney deal. You know, if you come up with a better way to do this, let me know. I hope I haven't been muted for a long time. Maybe have, I don't know. What one thing, in case I was muted, I want to be sure and say with regard to your Yellow Brick Road comment. No, I hope this isn't a repeat, but it's basically as I understand it, it's essentially the opposite of the initial balance setup. Okay, great. In other words, the expected moves are the outside parameters of one standard deviation, so price is expected to stay within them. As opposed to in the initial balance, you know, it's a 98% probability that price is going to exceed one or the other, and meaning that there's a 2% probability that price is going to stay between those two, IB high and IB low, and the expected move is the other way around. Look at us go. We're going to get that all-time high, sure as the damn world. And old, you know, Alice over here, or Karen here, didn't get the IB. If I'm eating something or whatever else, I try to hit the mute so I'm not being obnoxious. But then again, even though it's a big bright red light on my mixer, I don't know why. I'm paying attention to the monitors, I guess. I'm not looking down there at that thing. I guess that's the reason. And I'm certainly not a professional broadcast entertainer, whatever. I'm just barely. Oh, by the way, I got all of that straightened out with the audio and Discord and all of that stuff. Embarrassingly, I told my daughter, I asked my daughter about it because who's 18 and she games all the time and stuff and does computer thing. She comes in and goes, So, and we looked at the setup on the Discord and the audios looked right. And I said, but I couldn't hear anything on the headsets. I had to turn on the audio for one of the monitors to talk to GA. And she says, so what computer's the headset plugged into? And I just looked at her. I had it plugged into this computer, to the computer which I use to monitor the stream, the wrong computer for the Discord. Much as I hate to admit to stupidity, that was the whole deal. So the minute I plugged it in there, suddenly the headset showed up on the audio output device of the Discord and everything works like $1 million. I hate to be honest, but hey, at this point, it's better than not, right? And I did get the obligatory disgusted look from an 18-year-old sweetie pie. Right. I'm barely useful. Actually, to be honest, I'm glad it was just that simple. I would always prefer something to be a short between the headset or, an error on this side of the monitors than some crazy convoluted computer stuff that I may not be able to figure out. Here we go. God darn it. Here we go. We're going to get that. We're going to tag out that IB or that level. And sure enough, we're going to work our way up to this. I think I misspoke the other day earlier. I think I referred to this as a naked volume point of control. In reality, this was the gap high of the 15th, not the naked volume point of control. Where was that? Let's see. Anyway, the point is that we're going to, sure as the world, we're going to take out a new all-time high. And this is not the place where FOMO or chasing would be a good idea, in my opinion. And opinions are like, whatever that saying is. Everybody's got one. And yeah, I'm pretty disappointed in myself. So now we've gone past 36, so that would be past my second profit target, assuming an entry at 23. Would have been one hell of a day if I'd have gotten both of them. Huh? That's really disappointing. And what I get for not eating my own dog food, when you have a vetted setup, you take every instance of it which presents itself. Now, I think we discussed earlier, this didn't really meet the criteria because it didn't really test below the IB. It just tagged it and took off the other way. And I'm going to lean on that excuse, as lame as it sounds. But that's as close as I can come to an excuse for not being on this trade. Other than just, wussing out like Karen over here. Used to, years and years ago, living in Wyoming and golfing, and big, strong cowboy oil field guy. And he would just, try to knock the cover off the damn golf ball every drive. And once in a while, he'd whiff it, and it'd just go scrutiny off the edge of the tee box or something. He'd turn around to us and he'd go, "Oh, you ought to see my husband. He can knock the cover off that thing." Mike Stafford, never will forget him. He was a funny guy. And that's kind of how I feel about this trade I didn't take right here. That's probably not politically correct, actually. I didn't even think about that. But it was still funny and true. Yeah, I'm guessing this all-time high is going to go bye-bye today. Here we go again with this. You see that now it's not doing what I thought it was going to do. It's re-indexing down there now. I don't know what's going on. This computer, every weekend I run the check for updates, do so if it's required, and restart everything. Then these computers don't shut off from Sunday afternoon through the next Saturday. And I postpone those update checks for every 7 days. I run the updates on Saturday, and then on Sunday, I click postpone for 7 days so that you don't have one of those uninterrupted, oh shit, what was that? Because it starts to do a restart in the middle of what you're doing. Or at night, because the problem with that for my setup here is that anytime you have any kind of a glitch, you lose rhythmic. And then, the other stuff can be okay, but if you have any kind of a restart, I'm going to lose all my stuff. So I put those on. I postpone that for every weekend. And sometimes I wonder if maybe during the pause between 1600 and 1700, I'd be better off to restart this thing, say in the middle of the day, kind of reset the RAM and stuff. I don't know. I have no idea. I just find it funny when all of a sudden out of no place, some weird like that happens. Once again, I don't know. So, yeah, here we go. Disappointingly, not in a trade. My IB trades are the only stats I'm working on. And there we have it. What's going on anywhere else? I don't know. And I am real suspicious because, oh, here we go. Here's a bunch of new ones. Now we've got, okay, so we've got the press briefing. We've got signing executive order. How many executive orders? I've never known. I mean, maybe all presidents have done millions of executive orders, but I don't think so. And they just didn't do it publicly, I don't know. But I think what's happening here is that they worked out that if he does these, he can make policy changes with these executive orders if he says that we're in a, whatever it's called, a war against this fentanyl thing. That gives him special powers to be able to essentially rule the roost, I think, is the whole idea. But suspicious now about Trump dumps or tweets, because it's been pretty quiet this morning. Kind of scary. Kind of scary. Kind of scary. This gal here, the press briefing gal, whatever her name is, I don't remember, the little blonde gal. Interesting story about her. I read something on, I don't know where it was, Wall Street Journal or someplace. That position, she gets $200,000 a year, and she's married to a billionaire who partially funded her. Apparently, she ran for Congress or something somewhere, and he was a big contributor, and they got to be, I guess, more than good friends, and are married, and they had a child. And he has decided, I suppose, being a billionaire, he's got his business interests pretty well under control, and he's basically taken on the Mr. Mom thing, taking care of the baby, and doing all those kind of things to support her job. So good for them, good for both of them. That's pretty cool. When anybody does that, I think. Because when I first read about that, I was curious where the hell she came from. I'd never heard anything about her before. But then I've never heard about any of these press people before, Huckabee or any of those guys. And I just happened to come across that article, and I thought it was pretty. I thought it was pretty cool. I'm certainly not making any statement about her politics or her devotion to our dear leader, but I think the whole story about the life and him being Mr. Mom is pretty cool. Netflix earnings call. Fed Walker. Don't forget that we are in the middle of earnings season, so I actually knew some floor trader guys that I had learned how to do market profile with and from, that they would not trade earnings, wouldn't trade rollover. Because in their opinion, it was too unstable of an environment when stuff that they knew how to do, edges that they had, didn't work anymore. Oop. So, there you have it. Here we go. Okay, now, boy, now what are we going to do? Now that FOMO is going to kick in for the all-time high, and we're going to take a developing value area high off the top? Not me, because that's not an IB trade. I would have to seriously scratch my head if we came down and tested the IB once again. I'm sort of have a loose rule that I need to work on more diligently during my homework time. About focusing these trades strictly on the RTH1, in the RTH1 period. And now the IB high, and one of the things that I've been able to do successfully, pretty successfully, I should say, is be able to backtest the IB failure and continuation with my backtesting setup in IRT. I think I've shown you that before, so I won't bother with it. But it works. But again, with any backtest that you do, or any kind of whether you do it manually or looking back or whatever, you've got to make sure that the criteria is exactly the same. Otherwise, you do not have a statistically significant data set. You know, if you have a 5-tick stop this time and a 10-tick stop the next time and a 20-tick, target this time and a something else target the next time, those are not statistically significant, and they do not belong in the same data set. It's got to be the same. So when I do the backtest in IRT, I have to make sure that the entry criteria for either the short, obviously the targets and all that's real easy. T1 is 12 ticks and T2 is 48 ticks on a 2 contract setup. It's the entries that are important, and I am striving to make them as accurate or consistent with what I do here on the real market with the mouse. And that's where discretion can be such a one. For example, right here, right? We came back down. We did test this. We did come through, technically, the IB twice. Maybe a tick or so below. I guess I could look at that, zoom in on that better. Now, is that the criteria that I would use in my back testing? And should I have taken this trade irregardless? And I think the short answer is yes. But in my back testing, there's two ways you can look at the back test. First of all, you can push the back test to a chart, which is what's going on over here. Or you can run the back test and get the real in-depth data. For example, there's 5 days. This is the IB continuation in this case, for 2 contracts on the ES. Okay. And I want to run the back test, and it looks like that. And that's how long it took to go back over 2,000 days. This is 5 days of trading. It took 11 trades, 6 long, 5 short. Market bias was 9%. It's only got a $487 profit. Now, a couple things that I need to look at first is this one. The first thing I check is to make sure that the largest losing trade aligns with what the stop is. So 2 ES minis, 12 ticks, that's $150 each. So that's correct. And then after that, if I know what my winning parameters are, which are the typical 2-lot setup that I have, that I'm trading here in the multi-bracket, I know that the winning trade with both targets, 60 ticks, is $750. So that is the largest winning trade. So that's correct. So I know that at least that much of my criteria and my setup is being accurately applied by the computer. And then you can go here and see every trade and the results of every trade. What time, what the longest called, what was the result, was there a stop? Here's a short entry. I took T1, I took T2, and you can do that for each and every one of them, and it gives you a running total and the whole shooting match. Now, the thing that's important to do when you're doing this kind of back testing is to look at the criteria for the long and the short. Basically, the stops, the targets they don't change with these, whether it's IBC or IBF, because this is built around the basic risk neutral 2-lot package. So stops, targets, long, short, the same. These are end of day. What this does is if there's a trade on, I think it actually does one of them. If there's a trade on at the end of the day, and I have some parameters set about those, it cancels out. So it's like it'll close out the trade. But the real important ones are, and where they vary is on the entry and for both the short and long. So the criteria, you build rules, right, with these tokens. So here's the criteria for a long entry in the IB continuation. And this is what you can change. This is where it sets the risk neutral scale 1, the profit target 2, the stop, and then some flags over here that control whether it, how it handles the various conditions, whether you're in 1 lot or 2 lots. And this says that if the close is less than session statistic IB high and IB high 1 bar back is greater than the IB high, and you are position, meaning bars from the start is greater than or equal to 60. That's the first 1 hour, so it's the IB, right? And position is less than 385, which is an hour from 400. In other words, before 3 o'clock, then these things happen. It's real straightforward, real logical. That's how it works. Same way with the shorts, just the other way around. IB failures, other way around, just different. And in this case, it would be coming up from the bottom. Failure would be it tests through it and then goes back into it. Continuation, it tests through it and goes away from it. Simple, right? And if I can continue to apply those, and the reason I'm doing I guess the reason for this long description is that's the reason I'm doing the IB statistics now, is I was able to successfully work those backtest codes out. And then after I do that, the next one I'll look at might be the IB and the migrating VPOC, for example, or something simple like I'm really liking some of Rod's new statistics that he's doing, which is different than the way this works. When POC is migrated outside of the IB, then we have a specific probability that we're going to return to the IB. He's got that pretty well worked out. Those, I think, would be fairly easily codable and things to do for the next step. After this, once after this IB is, I feel like it's been thoroughly, properly vetted. And it's also worth saying, I think we might have said that earlier, how many setups do you need? Is $750 a day good enough for you? Obviously, you're not going to do that every day. Obviously, you're going to take stops. But if you say you get let's just do some math. I haven't ever done that, but let's do this. That'd be kind of fun. So I think there's 220 trading days in a year, I think. That's something to Google about. Let's just make it 200 to be safe. And let's say we're going to go to 75% of them. 150 trading days. And let's say, okay, hold on. That's $112,000. So if you only average 50%, of a greatly reduced Oh, wait a second. Let me start over. If you average 75%, 50% of 75% of a greatly reduced trading days per year, one IB trade to my basic 2 lot targets, that's about 60 grand. You know, which is better than a sharp stick in the eye. And you could certainly expand on that. But I mean, that's a reduced number of trading days, figuring 75% of those trading days and figuring 50% of those 75%. That's really whacking it down. It's still damn good, huh? Well, I wouldn't say damn good, but it is, like I said, it's better than a sharp stick in the eye, I guess. And just as with my vetting and being almost religious about sticking to this IB trade, process and RTH1, etc., any of these things that you do needs to be super conservative, like I just did with that, and that's one trade a day, right? I think the longest I've been in that trade is maybe 20 minutes. That's damn near money for nothing and the chicks for free, I think, isn't it? Where's that guy? Mark Loeffler. Yeah. So there is, I long ago when I first decided I would go into try to learn how to trade, I did so because it struck me as the greatest opportunity. I've had some pretty good opportunities and been pretty fortunate in my life, but it struck me as hands down the greatest opportunity I had ever bumped into or come across. Maybe one of the hardest to achieve because of the psychological part and all of those things, but I still believe that's the case. And, I could be as full of crap as a Christmas goose, who knows? But that's what I believe. I mean, I don't know what other jobs you can get typically where you could average, $500 to $700 in 20 minutes. Sure, there's people making, I heard that from a guy who is a retired software engineer from Microsoft. Meta has an offer out now for top AI developers. Never mind your salary. They will give a $1 million cash signing bonus, not stock options, cash. And then on top of that is God knows what the salary and the benefits are. So, there are people out there that are making more money than God, but I've never been one of them. I've had a good career and made money, but not at those levels. And good for them. I'm not saying anything wrong for anybody that can get it. That kind of money out of Zuckerberg is a winner in my estimation. But I wish I had those skills. I wish my daughter had those skills. I'd kick her ass out the door and send her to work and I'd never get out of bed. But the reality remains I need to be at this standing here, and I enjoy it. But I think if you're going to look at the potential profitability and what you can do with trading, you need to be realistic about it. How long have you been? Are you able to consistently be profitable at some level in a sim account? And if not, like TopStep, like something. If not, for God's sake, don't think that putting your own capital at risk in a brokerage account is the right way to go, is going to miraculously suddenly change your ability to do this. I mean, I think that's just completely stupid. If you can't be consistently profitable trading, like, in a sim account or one of these prop things like this, then there's no reason in God's green earth that you ought to put your own capital to risk, for example. And I understand that there are different, there's a lot of rules that don't apply because it's your own account and all, there's no daily drawdown and all this I get all that. But I think on balance, if I can't trade consistently, that one of these, this IB idea, and achieve consistent profitability with it, I have no business taking our money and putting it in a brokerage account thinking I'm going to trade better. I don't think. That's my point. And by the way, I'm not sure if I remember to say this in the pre-market, but this is a TopStep evaluation or combine. And the idea of me doing this was that I would start it, be absolutely transparent, take absolutely no trades off the stream. None of this bullshit of, I have a $1,500 loss and tomorrow morning I'm miraculously even because, I traded after the stream and I made it all back. None of that noise. So every trade is absolutely transparent for full accountability. And the idea is to go here, the XFA and the live account. And that's where we are. So, all of this stuff I'm saying is directly from the heart and is from my reality. There's no funny business involved. It's all completely transparent. And if you've been around the stream at all, you know how Bookmap works with the orders and IRT also. Hold on a minute. I don't know why I had that, but for example, this is how God darn it, this is how I journal a trade and how Bookmap records them. There's the entry. This green line is break even. Here's the first profit target. Here's the second profit target. Here's the stop. What did I do with these orders? Well, I moved my stop up here after I had taken out the profit target and we had traded way down here, and then came back to the profit target, and I got a little spooked and kind of pulled a Nancy, and then moved my stop, but stuck to my guns, didn't get stopped out, got real close, and held it to the profit target. And you can see how I narrate them. This was an opened higher out of range in the RTH1 direction. It was a directional day. You can see by the volume profile. Gap rules applied. I took an IB continuation trade right here. Got to T1 for risk neutral scale, and trailed up, or trailed my stop up to break even fear factor, and then took my T2 exit. Now this was absolutely not with the text or the annotations, but this trade stuff right here is exactly how Bookmap records it. And go back and look at the stream on the 9th of July. And there it is. And then when I do the snap, this is the statistics that you can open up. There's the 60 ticks. There's 4 contracts, live data, live trading. There you go. And that's how every trade is. So I think it's about as transparent as I can know how to get. I mean, other than invite you all over to stand here at the desk with me, that's about the only other way to go, I think. Probably not going to want to do that much. I don't know many people that want to stand here for 14, 15 hours a day, which is what I do. And and there's people that don't do that, aren't transparent, and who I know fudge stuff, have 2 accounts, do all of this crap, and they have big followings, and a lot of people really are crazy about what they do, and good for them. But that's not me, Trades by Matt. I used to listen to him, and when I was listening to him when I was in KL, I would listen to him while I was exercising. I used to do 4,000 steps up our building every morning, and I would listen to his streams because it was just coincidental timing. And I noticed that very frequently he'd have a big lie. His streams used to be, I don't know if he even still streams, used to be a couple hours, or he'd start at like 8:15 or something, and then trade for 2 hours, hour and a half. And I would notice that he was, have a big loss of a couple $3,000, and then the next day was suddenly even or up, and the comment was usually that he had been able to focus after the stream and trade, blah blah blah. Now he's the big, I think, poster boy for Apex, and I heard from somewhere that I don't really remember that they paid him because of his following from Trades by Matt, that Apex paid him $1 million to be their front man. So he's just good for, he's doing great. I remember very well when he was a project manager in software development. He's from Austin, Texas. And I remember very well when he discussed in the stream and talked about that he had quit and was going to go full time to trading, and how his wife had been supporting him, and all that stuff. I'm not saying anything bad about him. I'm just saying that there's completely different ways to approach this. And mine is to be a trader and try to help other people improve their trading. So that's that. And then there's some just plain, what is it? Truth is in the eye of the beholder, or what one person calls shrewd, another one calls a thief. There's all those different sayings. I don't have much use for these chain wearing, Lamborghini driving finfluencer boys that are doing pump and dumps and just basically screwing people over. In case of Matt, if he phonies up what he really did trade wise, and he had a large following that thought what he was doing was entertaining, and he got paid money by YouTube for that, that's okay. But if you're doing the, pump and dump or fleecing people who need their money, who believe that you may be their salvation, then you're a douchebag, in my opinion. Yep. Good. Me too. I'm still standing. And I'm disappointed that I didn't take that trade, as I've said about 1,000 times here, but I'm getting ready to go get something to eat and take a break from standing here. I've been here since 6. So I still think, let me rephrase that. It would not be surprising at all to me if we reload here through the noon hour and get up through this all-time high. And I'll be actually surprised if we don't get up through that all-time high by the end of the week. Wouldn't be surprising at all if we got up through the all-time high today. Wouldn't surprise me a bit. And we've still got 220 living out here or 212 living out here at 40. Pickleball. I'd never even heard of pickleball till we got over here, moved back over here a couple of years ago from Asia. But apparently it's a big deal. One time the company I was with, that everybody went to this bar and place where there's several places over here. This is Houston, by the way. There are several places here that have it's a bar, and they'll have pickleball courts, whatever those are. I don't even know if they're inside or outside, to be honest with you. And volleyball, and they'll have sand, and stuff like that. And it's just kind of a place where where folks go and have some drinks and play some games. And it seemed like a pretty good thing. They had a couple of events where everybody went and did that. I'd never heard of what pickleball was, and I don't think I've ever seen it. So. But yeah, anything you do that's a little bit of exercise and fun, well, how can there be anything wrong with that? I haven't looked around the mulberry bush here. I don't know what's going on elsewhere. What's Tom doing now? He's still streaming. Okay. Top Ash is doing something. He's looking at something. Update 9490. Trading View. Oh, there's Pat. Yeah, it looks like all is well in the TLab. That's good. I think Rod is still down island. And yeah. Mama's got something going on that's got my nose all a Twitter here. I may have to mosey over to her into the house and see if there's something I can stuff in my throat. Now I would be very hard pressed. Decision time, right? Or if we came back and tested this IB again, VWAP, POC, full GB, Globex VWAP. My initial reaction is I'm not going to be engaging after RTH1, especially going into the noon hour here. I don't think there's a very high probability of success on those, any kind of a trade like that this time of day. A lot of, could be completely wrong. It could be the perfect time of day. And in recent memory, we have taken off and launched through a target. We've also in recent memory reversed big time during the 12 to 1. So I'm going to probably defer to something to eat and a little bit of a rest and see how we progress into the afternoon. Be content with the fact that I missed, first of all, I had an error. Per my plan, I handled that correctly, disappointingly, because I would be now well scaled and out of my trade. Threw me off, and I didn't take my IB because it didn't actually meet my criteria. Also would have been scaled and second target. So I'm going to not try to be a revenge trading woulda, coulda, shoulda. I think that's the further into the day we go, the less probability my trading style has of being profitable, especially after a couple of missed opportunities. And again, there's no missed opportunities. There's only the next one. But, there's that. Well. Context is definitely up. This could be one of those buy the dip, right? There's that always. There's another approach to trading. And it's another one of those days so far. You just, buy the the IB low and go to bed. You never had any heat, any sweat, any strain, and here you are. Of course. That's only a viable option when you're looking in the rearview mirror, or at least for me anyway. Now, if you're busy doing the VPOC migration and fast, there you go, boom, and no heat all the way up. All right, I'm going to go have something to eat and shower and whatever else. I'll put on the old walking base here. My only advice at this point in time, or my only comment, is to be the closer we get to 12 o'clock, where we are just flipping over now. Obviously, there's always the possibility of the 12 to 1 statistic. And we are just, by the dip, baby. It's higher highs and higher lows, and context is definitely up. However, it's the 12 o'clock deal, and they often reset. So be extremely cautious here. This is RTH2. So, and I'm nobody to really be giving advice because I'm not Mr. Wizard here, but I'm not claiming to be. But remember that this is my virtual trading journal, so the idea of this is to talk to myself. And this is how close we got to all-time highs set in the overnight range. I'd say that's a huge target. That's juicy. I'll see you back soon. All right, so that was a pretty successful feeding frenzy there. Where the hell are we? 12:30. All right. So be sure, remember, this is 12:30 Central Standard Time. Everything on this stream is in Central Standard Time. And that brings up a question. When I think about the 12 to 1 statistic, excuse me, I always think about it in my time frame, especially because this is also the same time as the CME and everything else. So, but, you know, withstanding that, the 12 to 1 trade basically says that if we are in a directional market and if we put in a new high between 12 to 1, there's a high 80% probability, I believe is the statistic, that we will put in a higher high at some point before the close. It's kind of like the IB statistic. It's pretty hard to trade, but it's pretty easy to identify, right? So, for example, here's our RTH high. If between now and 1 o'clock, 1300, we put in a new one, very high probability that we'll put in a higher close before the session closes. And I still maintain that this all-time high, which was put in the ETH session, is definitely on the table today, tomorrow, the end of the week, whatever, What's today? First of all, today's Thursday, isn't it? Okay, so it's only 2 more days. Yeah. I was thinking it was Wednesday there for a minute. Yes, time passes fast when you're having fun. Okay, so that's a statistic to bear in mind. What are we doing? Well, we've traded up here, and we're now putting in a distribution up here at the highs. So I would say that all of that is probably pretty valid. My IB statistic, I've talked about that ad nauseum. My fat finger mistake over here and my trade plan immediately canceled. Did it fast enough that it was no harm, no foul. However, it went on to my risk neutral scale and then T2. The IB trade, which I was waiting for, didn't really provide the proper setup in per my definition here, but also went on to the IB or the risk neutral scale and then the T2. So I've basically been a dunce twice. And therefore, I'm going to go punish myself by making myself lay down and take a nap without lunch. No, not really. Anyway, so that's where we are at this point, and I'll be back after a bit. Yeah, and I'm definitely out of the way of this little blonde gal and that White House stuff. So, and then I think His Majesty is going to be talking later, if I'm not sure or not mistaken. Oh, he's going to be signing executive orders at 1500. Oh boy. There we go. I thought the White House briefing was at 12. Must be late. Okay. Well, anyway, have a great whatever it is, and I'll be back pretty quick. Remember that there are 3 positions in trading: long, short, and flat. And in reality, flat is probably the best position the majority of the time. Most people, in my opinion, force trades and overtrade and, let their rational mind convince them of stuff, and that's a problem. So I'm going to put her on hold here and put the walking base back on and go check my eyelids for leaks. Ha! Bam! New all-time high. Looky there. Told you. Huh. Well, yeah. Exactly. So the 12-to-1 trade is played out pretty accurately. And here we are with a new all-time high. Now they'll be happy it's in the RTH session. I was away and I didn't trade it, but you know, my IB high initial balance trade also panned out. Looky there. It may not be over yet either, but well, I guess there's a certain amount of reassurance in having an understanding of what was going to happen to some degree. Certainly not a prediction, but a anticipation anyway. Disappointed about that IB, more so about this fumbled trade over here. Not really disappointed, but alarmed. I thought I had those click in the data column out of my system. Well, today, not necessarily anything. What though? At this point, of course, you got to ask yourself, is there going to be profit taking up here in the last hour? They've put in their all-time high. They've traded up all day. Oh, I'm sorry about yawning. Up all day. All-time highs in the books during the RTH session, which I'm sure was keeping them up nice. Would profit taking be surprising? Oh. Tomorrow's expiration. Well, I guess this is what happens when you don't have a tweet bombs. Oh, what can happen? So I guess all that occurred. Well, now wait. At 3:00 is going to have the executive order signing, so that might have some impact, but it's not going to impact our cash market today. So that's okay. Okay, now power hour. We're going to round the curve here pretty quick. And tomorrow is the expiration. Well, no, I don't see a trail of singles leading up to the high. There is, we're overlapping right up to here now. There is a good high, which means there's more than two TPOs of excess. But wait a minute, wrong screen, sorry. Right here, huh? Now this is a string of singles. Single prints, in other words, a string of singles. But very definitely not the case here. There's some singles down here, but it's a good low again because there's excess. As I understand it. I'm sure sorry that well, I'm not sure sorry. Yeah, I am sure sorry that I didn't take that IB continuation trade, obviously. That'd be quite, that'd give you some real bragging rights to take that IB continuation trade and put your target at the all-time high and hit it. Never mind, it would have been a 20-point trade. Hmm. Somebody's been holding up to that new all-time high, and they're taking profits. How do you take profits when you're long? You sell, right? I mean, I certainly wouldn't be looking to trade this at this point. My opportunity was back over here. And this world famous, look at there. Had I not been clever and gotten out of that quickly, well, that would have been one hell of a mistake, huh? 45-point mistake. No, I don't have any. That's just a joke, obviously. The absolute correct maneuver or correct response when you make a fat finger or an error like this is to immediately flatten it as fast as you can, which is exactly what I did and why it didn't cost me a penny. 4 in and 4 out, and it didn't cost me a cent. That's pretty quick. Now, being on my back foot and not recognizing this IB continuation trade here is an error for sure. And I'll put that in my journal in the mistrade part, which is a pretty good thing to do. Journal these things. And the way I do these mistrades, I'll go back this evening between 4 and 5 and trade this exactly on the replay with my bracket, and I don't touch anything. So it's there's not, in other words, I'm not going to put it in my bracket as a mistrade and then have it go all the way up to here for a profit. That's stupidity. But I will put it in as with my bracket with my mistrade, and then I put it in the journal and I do it right just like that. This is a mistrade, and here was one that I did whenever that was, the 10th. I belong again, mistrade, and here's where I would have gotten out on the bracket, actually, and here's where it could have gone had I managed the trade. So it's almost identical if you look at wow, that's pretty spooky. Look at this trade action. And look at this. God damn it. Look at this trade action and the mistrade snap that I will put in the journal, in my records. And look at this trade action. And then look at today. Look at that, almost an identical profile. That's pretty interesting. Yeah, anyway, so that's how I do the mistrades. It's like Tom's rubber band thing or the error cost calculator kind of a deal, Something to let you know. Well, and it kind of reinforces in a different kind of a way. Yeah, why didn't you take your setup as you were supposed to? And look why. Look why you should have. So that's, there's a thought. One thing about trading is you usually are alone, and it's for hours, and you can dream up a million different things, I never got back under that MCVPOC. Funny, huh? Or maybe by a tick or something. Come on. It went long now? Oh, or no, okay. I hope I see what you mean. Yeah, I got you. I just saw that last comment and thought, whoa, I think you're probably meaning right here. And that would have been one of Rod's deals, I think. Consolidation and almost a bar trade, and then this thing spiked down. Yeah, that would have been a good. I think well, all you have to do is look backwards at the day and say to yourself, buy the freaking dip. Pick one. Pick one. Pick anyone, and you're going to be okay. Oh, really? 938. Okay. Wow. That's quite a bit ahead of me. Right there, huh? Wow, that's great. That's right where I made my cuck up there, trying to draw lines. Nice. Now, if you'd have just sat there and had left your bracket on, well, where would you be? You'd be in the money. What is that? 11? Yeah. Say you got in there at 11. Where are you now? That's 35 handles. Pretty nice. Yeah, I mean, maybe. I don't know. Just, I try to look at it more. I think people put a lot of overemphasis on the fact that this is, there's so much conversation about the psychology of trading and all that kind of stuff. Look at it, put it in a different perspective, do you shit your pants? Of course you don't. Okay, well, so you don't overtrade either. You know what I mean? Or something like that. That's how I think about it. I try to think about it in a different perspective. I can't think of another. Maybe that was not the best example to use there, but you get my point, right? It's like, of course you don't do that. Do you get drunk and drive 1,000 miles an hour? No. Just pick anything like that you do that you don't even think about. It requires willpower, and it requires, I guess willpower is the thing, or practice or habit, and that you don't even think about doing, but you do, and you do it without thinking about it because it's just something you do. I don't move my stop away from my entry. It's just like I don't crap my pants either. Same idea. That's how I review it. And I don't know whether I'm more or less emotional than you or than anyone else. But I try to look at it in that context. And I also try to be really aware of the fact that I'm being triggered and then consciously not act on it. Unfortunately, right here, I was still, triggered a bit emotionally about why I had made this mistake right over here, even wherever it went, even though I was glad that I had reacted the way I have in my trade plan, which is to the minute I make some sort of I actually have error codes for my trades, and this would be an error execution, because this was an execution error. I was trying to draw a line and I clicked inside of the active data column by accident, and I was suddenly in a long. Well, one of the things that I have in my plan is to immediately flatten no matter what, just as fast as I can. I've actually practiced getting up here to hit that button as fast as I could, because I used to use the keyboard. And I did that, and there you are. But I was disappointed with myself to the point that I allowed myself to miss this one. And as we both talked about a long time ago, it wasn't really quite my criteria, because typically I would have expected it to go down and test into here a little bit more before it came across. So I can console myself a bit with that the reason I didn't take that IB continuation trade. But as far as a lot of that stuff like over trading and revenge trading or trying to make up or those kind of things, just put it in a different perspective. You've been working in the hospital a long time, and I'm sure, that requires a lot more probably discipline and protocol and things than I can even imagine. And you do them without thinking about them. Just second nature. So this is no different than that, I don't think. I do think that all this lip service that's paid to psychology to do with trading about how tough it is and how it can ruin you and how it can do all this stuff, that's the part. Yeah, there's a lot of psychology involved in trading. But I don't think there's any more perilous than anything else we do. Hunting. Using gun. I don't know if you hunt, but I mean, there's one for you, me too. But I grew up on a ranch in Montana, and I had guns since I was 8 years old. I don't anymore and haven't for 40 years, but I grew up hunting and doing all that kind of stuff. And we had guns around in the back, in the back window of the pickup and the rifle rack and all that forever. But nobody shot themselves. You didn't even think about gun safety. It was just part of your life. So maybe approach it like that a little bit differently. I don't know. This is interesting, all this selling going on up here. All this absorbing. I guess that is absorption. Don't forget that have we made the, yeah, well, those are the market on close orders being absorbed up. And we have another possibility for the refresh here in another 5 seconds. Sometimes there's another round of them right now at 55. Yeah. And there we go. So now we'll go into the close and we'll see how if the closing swing trade comes to pass. It will without me involved, but. A lot of people taking profit right up here, boy. Look at that. What are those closing swing trades all about? I don't mean closing swing trades. So market, oh, looky here. Wow. Now, the way you read this here's one for you. 3,251,000,000 contracts sell side S&P. 3 billion, do the math on that one at $12.50 a tick. 3,251,000,000 contracts for sale on the S&P, sell side orders. 649 million, 1,064,000,000, and these are all sell side. Dow 30, and the Meg 7 is 338 million. Wow. Every time I see these billions, I think, boy, I am truly an insignificant little, not smaller than a freckle on an elephant's ass. Boy, I'll tell you, it's amazing, isn't it? 3 billion. That's one of the higher ones I've seen. That's pretty amazing. And here we have that late, right on 3 o'clock VPOC migration. This is, I don't recommend you going long up here, anybody. Where's Antonio? Just strictly a joke there. Absolutely a joke. I think he has, well, I don't know his trading history, of course, but we've joked that we neither one are successful at all with that VPOC migration trade. So that's why I joke about it here on the stream. Reference a joke, and certainly not picking on Antonio. He's doing a great job. And are we? Yes, we are. There's the cash close, boys and girls. I guess if I had to say one of the things that I am conscious of at this moment is to be extremely measured on any trades. If I should take something in the ETH, which I won't, because it wouldn't be on the stream, or tomorrow, don't want to be, mad at myself for making this mistake, even though I'm glad that I handled it in the way I have in my trade plan, but letting it throw me off to not take this planned trade, which is one of the two trades that I'm focusing on vetting. Okay, I have to be real careful tomorrow that I'm not that I don't let my guard down, and be vigilant about all of the parameters around either one of these two IB trades, and that's what I'll take. That's what I'll be looking for tomorrow. That's I guess I can never let my guard down. I have to be continually aware of that. You're never going to get over, or at least this is what I believe, you're never going to get over the emotional part. That's your monkey mind, that's the wiring from the evolution. And so trying to get over that or get rid of that or whatever is just a futile waste of time, I think. What you have to do is recognize it and not act on it. I'm feeling FOMO here. You recognize that it's FOMO you're feeling, and so you put your mouse down and you step back for a couple minutes. That kind of thing. That's how I look at it. That's how I do it. Just not that I'm having FOMO now, but and of course, in the rearview mirror, everything is so clear. Okay, I missed this trade here. We came up, we pulled back. Here was a bar trade. Now, it's not one of the trades I'm vetting because I'm only working on the IBs. But here's a bar trade, swing up, retest, and up. And then if you want to get even more disappointed with yourself, there you go. Buy a dip. Pick a dip, any dip. And you went long. If you want to get really disappointed, go long at the open. So it's all a matter of reference and time frame and all of those things. You just need to pay attention to what you're trading, and this is the time frame and the area that I'm trading in. And I'm working on the initial balance trades, and that's what I'm going to do until I feel like I've got them thoroughly in hand and a good data around them. And then I'll start to do another trade. Means I'll have two opportunities. I'll be able to look for the initial balance trade, and then I'll be able to look for whatever the other one is, the next one, So that's my plan. That's how I'm taking this forward. If that helps or not, I don't know. But again, this is my journal and I'm thinking out loud here. So there you go. And, if you want to really look at time frame, then zoom way out. If you're young, go put, and you got 10 grand, go invest in the stock market and forget about it and come back in 20 years. And the stock market in America, God knows what will happen now, but the stock market in America has averaged 8% a year up for the last 100 years. Well, there you are, compounding interest, you'd be way fat and way happy when you retire. That's looking at it. That's a longer time frame. There you go. Nobody says we've got to be, well, there you are. So you're flattening your trading micros. Okay. Be sure that, one of the things I have no clue about, obviously anybody's account, but what I'm mine. But you've got to be, the first thing you've got to approach this trading from is risk management. And I say that early in the stream somewhere in the pre-market stuff. Your primary objective as a trader is to be able to trade tomorrow, i.e. that's account preservation, and the only way you do that is with risk management. Doesn't matter if you've got the most fantastic strategy and setup in the entire world. If your account's blown up, what the hell are you going to do tomorrow? You're not going to trade. So that's the basis for me saying that. And risk management needs to be predicated around your account size. And you know, if you're coming from somewhere like the TLab or someplace like that, there are all kinds of traders in there. I'm sure Tom has got a great big account, and he can take 5 or 6 stops in a row, waiting to get in, you know, testing to see if he gets on the right side of the trade, and it doesn't bother him. The typical rule of thumb is you don't want to take more than 1 or 2, maybe 3 at the absolute very most percent of your risk percentage of your account on any trade. If you're trading a TopStep thing or one of these evaluation things, what's your daily loss limit? You know, if you trade 2 minis on a $1,000 loss limit, what is that, 30%? I mean, because that's $300 if you take a 3-point stop. You know what I mean? So you have to understand that and recognize those things. And then that's a great reason to trade the micros for that exact reason. And you can make money with the micros. I mean, I had mess around sometimes with my daughter and I with a TopStep X account that's got nothing to do with any of this, and we'll throw in a trade or whatever else and go to bed and see what happened in the morning when we wake up and stuff like that with one micro. And it'll be a couple $100 one way or the other. You know, so it's not like you can't get any place trading those. You can't really get any place trading them, particularly with real short time frame swings or trades. But, you know, I understand the concept of it's only 10 to 1, and that's true. But if you have a small account or a daily loss limit or something like that, you really need to approach it from that point of view. That's the ultimate first thing. And then I heartily recommend pick out identify one setup and the criteria that qualifies that setup for an entry and the trigger, and then capture a statistically significant data set of that in the over the course of trading. That's exactly what I'm doing with the IB. And I've gone through all this a few times today talking about it, so I'm not going to do it again, but that's the whole idea. I mean, that's exactly what I'm doing. All right, so there we go. You mean your max risk? Well, it can be, or it depends on how many points, you know, what your risk is, what your stop is. Because if you have, you know, you can have 2 micros and double or triple the size to get the same amount of risk in terms of dollars or account size. I think needs to be approached like that. That's an advantage of, and that has to do with volatility and how you've determined the amount of ticks, like over here in this, wherever it went, in the multi-bracket thing, how do you determine the amount of ticks in the current trading environment is the stop size. And then once you determine that, in my case, once I determine that, then the risk neutral scale is already set in stone, because it is for half of the half of the package, and it is for the same amount of ticks as the stop. So the minute you know the package size, and the minute I have established the stop size, then this is academic. There's no question about it. This is what it is. And then this one is the rest of the package, because there's only 2 lots in this particular size. It's a risk neutral 2 lot. And I put this where I think it's most optimum within the trading range, the harmonic rotations, etc. Here's a 4 lot version of the same thing. 4 lots, 12 ticks. There's no question about what this is going to be. It's going to be for 2 contracts, and it's going to be for 12 ticks. Then I split these up 2 ways. When Trump was busy, shooting off his mouth and signing orders about tariffs and crap, and we were having 100-point swings on the ES, it was quite obvious that 12 ticks was not even remotely reasonable stop size, because the rotations were so much greater. I put these 2 together, and this is a 4 lot, high volatility, 24 ticks, and that was even pretty close. I didn't do very well with this. I was thinking I had to make it wider. Well, for my case and my account size, if you're trading 4 contracts, the first thing you can do to minimize your risk is drop down to 2. After this, if that's still too rich and the volatility remains high, my only option is micros. Because after you get, 2, it needs to be an even number of contracts for the risk neutral setup. And there's no other even number of contracts below 2, right? So the only thing I can do is go to micros, which I did. That's why they're up here on the thing, and that's why I have this whole setup right here, charting micros at the same time. Oops. Don't keep it up very much, obviously. So that's what you have to do. And there's no shame in it. You're intelligent. You are managing your risk per your account size, given the volatility in the market environment. That's my opinion. Remember, this is all my opinion. So there you are. I was trading 4 lots, 4 minis. And then that wasn't working out. I was taking too many losses, so I moved down to 2. I'm coming, and then into micros. And now I'm coming back out of micros, and I'm on the 2 lots. And that's working out okay with focusing just on the initial balance trades. It's not rocket science. It's just basic common sense and math, really. There's a lot of terminology around trading, and a lot of people try to make it sound like it's real hocus pocus, magical, wear a pointy hat and a magic wand and all that crap. It isn't. It's like balancing your checkbook, or something about that simple. The terminology, sure, but once you get around that, it's just pretty simple. I used to have I don't know how quickly I could put my hands on it. I built an Excel thing once upon a time. That's in my old Excel journal, but that's on another machine that's not connected here. And it's the burn down. You put in the instrument, which then gives you the per tick value, and you put in your account size, and then you can set the number of contracts per trade, and it gives you the burn down. It plots the burn down. How many trades would it take to blow up your account? How many losses or stops in a row will it take to blow up your account? You can do that simply yourself, real easy. Use Excel or something like that. And any of those things are real easy. That's risk management. How many trades can I put on this account? And there are many times when you will have multiple stops in a row. That's because this is a random market, and just by the nature of a random environment, you will have a random distribution where you can have several stops in a row or several wins in a row. That's also a reason why a larger data set for vetting a trade or vetting a setup is important, because you don't want to make a decision about something and when it's highly possible that the data you looked at is only within a random distribution. So the longer you look out, the bigger the data set, the more dependable it can be. But if you have a $5,000 account and you risk $1,000 a trade, guess what? You can take 5 stops before you're blown up. It's that simple. So there you go. All right. Well, we did accomplish the world famous all-time high. We've closed at the all-time high, and brought the VPOC up there. So I would suppose when the RTH opens, it's going to continue on. It seems to be the way it works. Yeah. Euphoria. Irrational exuberance. Is what they used to call it. Alan Greenspan. Okay, so have a great evening. Thanks for stopping by the stream. Smack a thumbs up, and if you want to, the stream starts every morning at 8 o'clock, where I do the numbers and the pre-market and all of that stuff, and it runs through the cash close, so that I don't miss I don't see any opportunities to trade and not take them because of the stream is not up, and I have a commitment to not take any trades off the stream. So there's that. Have a great night, and I am going to shut her down here. I can't think of anything else that's important to add. Have a great night. Get some rest. Go out and, do some push-ups. Go for a walk. Ride the horse, whatever it is. Play with your kids. Balance your life. That's really important. This can be a lonely fixation thing. If you're sitting down in your grandma's basement in your underwear in the dark, you need to think about it. Have a great one. I'm going to be back at 8 in the morning. Tomorrow is SPX expiration. Let's just take a quick look at that while I'm still babbling over here. Okay, so first of all, investing.com and my financial juice here are both free. So there's no excuse for anybody that's in earshot of this to not have these same numbers and be aware of them. And here's tomorrow, I think, assuming he wakes up. Come on, wake up. There we go. Here's tomorrow. So there's no 3-star events, which is a little bit surprising. I would suppose that building permits and housing starts is probably pretty important. And the Michigan expectation and Michigan number is always considered important, and typically can be a market mover. For some reason, it's a 2, it's oftentimes only a 2-star. But keep your eyes on that one, and that's 9 o'clock. And it's important to know that we are in earnings. Now, Friday is going to be okay. It's going to be less. They're still doing the financials, and then they're starting to get into drilling, right? Like Schlumberger here, but we've got American Express and Schwab, and I don't know what the hell that is. Regions Financial. I mean, I don't even know what some of them are, but there you go. And you can tell that they are, by this little sun guy here, they're all going to be reporting before the market. The little moon means after the market, and the little sun means before the market. If you prefer to see more complicated looking thing, you've got Financial Juice, which is also free. Yeah, and they have these ads here, and it's a little bit delayed. That doesn't seem to bother me much. And I think it's fairly expensive. I don't know exactly how much, but anyway. And so here's the 18th. Now there's Japanese numbers coming out, the CPI and stuff coming out later tonight, but these are tomorrow's numbers. Earnings calls, and you notice they've only got the housing starts up here and the building permits. And the University of Michigan, which they don't have as red, but I've seen that move the markets for years now. So that's what we need to look forward to in the morning. Yeah, I'm still in awe of these market on close orders when we have 3,251 S&P 500 contracts to sell at the close. I'm assuming that this is option hedge unwinding, I guess, because I think the option people, I don't understand this whole game, but I think the the futures are the major movement and major market of our futures is for options hedging, as I understand it. And since there's expirations tomorrow on the S&P or the SPX, that's likely what this huge number's about. Imagine that. I don't know how to put 3 billion in my calculator, so I'm not going to try it. But, multiply 3,251,000,000 by $12.50 and see how much money that is per tick. Amazing, huh? Well, very definitely, I could, and my family and everybody I know, live the rest of our lives happy as pigs in the mud with one tick, right? If it's $12.50 a tick and there's 3,251,000,000 of them, you know that's got to be 3 billion times 12. Huh? Wow. The amounts of money involved here is pretty amazing. They were talking about, I heard some guys, Tom Sosnoff and some folks talking about the bond market and the real size of it. It's $50 trillion market. Trillion dollar market. $50 trillion bond market in America. Assuming they know what they're talking about, and I believe that they do. So there you go. We are so insignificant in the grand scheme of things. We are basically less than noise, I think. And it's so funny how traders think everybody's hunting their stops and stuff, and it's because they put all their stops at one spot and in a place that's extremely likely. Clear back over here earlier today when the market was along here somewhere, I said, well, be careful because there's all these right here. I said, be careful about all of these tests up here to the IB because where are all these guys putting their stops? And bam. And then up we go. Not that I'm any kind of a Houdini or a whatever else, but there you are. Yeah, see ya. GA, have a good night. And anyone else, have a great afternoon, and I am done like dinner. 8 o'clock in the morning. If you're interested, subscribe and poke the reminder button. And since I'm not monetized here, I'm only in this for the likes and the subs, so that would be great.